Excellent connection, but yet I don't see any video. There we go. It's almost like it came alive. So weird. Come on. We having some trouble this morning already. Hazel, hello. The happy kid, howdy. Howdy. Good morning, Kim. Oh. Is it Kemen or Keeman? Kemal. Thank you. Okay, apparently someone in the Discord posted a cracked, honestly don't know where it is. Where the heck is, they posted some kind of a link to TradingView, and apparently it's bad. Let's see if I can find it. Where is it? I don't see it. Oh, here it is. Let's get rid of it. Okay, so yeah, apparently it's got some kind of key logging software type stuff in it. So that's not good. We don't want that. They probably didn't do it on purpose, but it's not, well, who knows? It's not safe. Whispers. Good morning. Oh, sorry. I had to delete something real quick. Again, somebody posted something in our Discord that apparently has some kind of malicious coding or something in it. And I don't know if they did it knowing what it was, but that doesn't matter. We're going to get rid of it. So, okie dokie. So probably not going to see a lot today. If we've got a max pain around 4.5, I doubt it. I would be very cautious about any kind of an up thrust this morning, and I think we should be just barely pushing up against that outer creek. Nothing unexpected so far. Okay. Really, this is just going towards that same point, so I'm just going to do that. Okay, so like basically the expectation would be, I don't want to say it's going to necessarily be a head fake because that kind of bums people out, but it does have that appearance of like, hey, let's run it up and then we'll drop it the rest of the day kind of thing. My expectation would be, 450 today, And I think this is all part of a greater auto reaction here. The question of how high it came is a bit of a question that we could try to answer, like whether or not it was good or bad. I think we could try to answer that question because it did come pretty high. It came up to like 62, right? No, it came to 463. 464. 464. I don't think it went too far. What do you mean by came too high, Booksy? Well, it doesn't always work perfectly because if it's not like a classic white coffee and range, it can be a bit misleading, I suppose is the word. Especially if there's not like an obvious SOW, like sign of weakness, in relationship to the floor. But usually you're looking at that floor previous, and you don't really want to see the price go above it, which is, I don't know how to say this except to say it's like more of a signal of distribution. So it's not unlike an up thrust where you're pushing above the top of the range, right? So if you don't have the top of the range because it's an auto reaction, you look back at that preliminary support on the way down, like where did it kind of build a ledge and drop from? It's sort of debatable because I might have even placed it here at like 5.4, 454, just because this was still, I mean, it's weird because it came down. That's what I'm saying. It's not like, this looks like an LSPY to me. It doesn't look like an up thrust after distribution. So in that case, this is just like a failed spring with, which translates to a sign of weakness, right? And then you have a distribution and then it drops. It's not really like a classic white coffee in range. And frankly, it's very like obvious that it was distributive because it just failed to jump any creeks or anything. So there was no like confusion about it. I think that the overall picture has been pretty straightforward with these drops. As they are diamonds, they can kind of go either way. But this one in particular, I was trying to identify like where the floor is. I think it's 464. It bounces between 464 and 463, but when we left this area, it was at 465, like for sure. So I think that's where it is. Anyways, so why would that be a problem? Again, when you go ahead and go back and you test the very top of the range, if you're not ready to leave, that's usually a distributive sign of, like if you go all the way through it, it's more of a distributive sign. So that means that you're kind of passing back up into the higher range and then trying to get sellers involved. An accumulation doesn't need to do that. Let's just put it that way. Like a good accumulation can kind of build out a range below and doesn't leave until it's ready to leave, which is either after a kind of final spring or LPS. Good accumulation is going to be doing more testing of the bottom in a lot of ways. And so there's a lot of reason to kind of be suspicious if this pushes too high. So yesterday I'd said maybe 457 because I was looking at this here. And y'all are like, I don't remember you saying that. Well, I said it on the Discord group. I didn't say it on the stream. So if you didn't, if you were not in the group or if you just weren't around yesterday afternoon, I was talking about the same idea of like an auto reaction, and I would have put it here, not here, but I think that this is kind of flexible, so I'm not too worried about it. Basically what I want to see today, weird as it may sound, is I kind of want to see either the first leg of that pushback down to 450, or I want to see a bounce frankly, as weird as it may seem, this could be a very volatile day. We could probably come all the way back down and fill the gap at 438, and we would still be in good position. But I would prefer if this sets up like a normal auto reaction backup support. So we may even see this be pretty high up. It's starting to look a lot like that 2020 bottom. If this ends up landing at 450. So this could be a very, very, very boring day, is what I'm saying. Okay. Now, what happens if it breaks above 464, Booksy? Well, my little doodle here isn't like irrelevant. I tried to do this with the upward push. It's the same concept because 465 is a very important support for AMC. At this point, nosediving beneath it and coming above it requires that support to be rebuilt. So if you don't rebuild it, then it's, again, possibly distributive, very distributive in some ways, meaning it's going to try to knock it down to another range below this current little bottom. And that would be kind of bad, right? But if it builds out above it, I don't really feel like there's a strong reason to be super worried because there's a lot of different kinds of bottoms in the market. One of them is called a V shape, and it's basically we go down and you just react strongly. And the only thing I see that's wrong with that is maybe the volume on it. I like that there's high volume going into the bottom here, that there was a ramp going into the bottom. If we saw that kind of ramp going into the top like we did back here, like go back to September 6th and you see that ramp of volume going into that top where it like pushed above previous supports at like 506, goes up to 511 and then it dumps. Well, notice that the volume had like ramped up into the top, and then as soon as it hit the top, volume drops and just kind of really weakly comes back in. I talked about this actually in our group a bit because I talked about the nature of a spring and how I'm flipping the chart upside down right now. With a spring, you get that same kind of violent bottom, like heavy volume action, and then you'll push back up. And the volume during the push up is typically very light. Like you'll trade the bottom, you'll trade through the floor, and that volume is typically very, very light. If you look at this compared to the volume going, in this case, up. And then when the reaction happens, it finds support, right? And that's a really classic bottoming action, although unfortunately in this case, this example I'm looking at, it's actually a bearish action, right? So there's a concept here of, it's kind of interesting because it's upside down, but it is a very strong concept of like what a spring would maybe look like. And I think it's really important to note like the volume as it goes has had similar kind of movements on the sell side where it ramps up into a bottom, but then the recovery is like not there. So this particular example is a bearish example. And when you look at it again upside right, you can see why, that's funny. You can see why that's bearish, obviously, because it's pushing over the top. And then you're not getting that support. You're kind of rejecting underneath that resistance, right? So how would that look if it were, it's pretty straightforward, It's almost like the way I drew it here anyways. But it would be more like an LPS, right? So you would see it potentially, if this were to do the same thing, come back and basically stop here and then move back up, right? Simple enough. Assuming that this is 441 is the correct resistance or support, I'm just thinking about what we just talked about, so I said resistance, but you see how that's a very similar move, but on the bull side. You could, in theory, do this back all the way back above 460. It's not impossible. It just seems very unlikely to me that that's what happens. They left a gap down below probably for a specific reason, and I think that reason is to go later and go for a spring. That's why they left it so close to the floor, which at this point is like right at like 436, 435 kind of area. maybe 436, 437 is more accurate. And then the idea of coming all the way back up above 460s, you'd have to kind of push pretty far. You don't have to necessarily go all the way up on one go, but you have to make an advance at least above 470, because that's the place that you rejected off of. So if you're looking at reactive moves like this and they're V-shaped moves, you always want to pay attention to, like, where did we drop from, right? Where was the final resistance that we could not break? And in this case, it's 470. So when and if it came back up, if it did it suddenly, which again, I don't think is likely today, but if it did do it today, what we would look for, this is kind of the outlier scenario, and I want to talk about it because it's important, right? Would be a push above 470, because that would indicate that bulls are strong, and this time they're coming back. They got the liquidity they need. They're coming back. They're pushing higher. Then you need to find support. So it kind of looks on my screen like I got two completely different options here, but they're pretty similar. Like, both of these could be true. You could have another push up and then a longer period of consolidation that comes back and like double bottoms on 463 or something like that, like a bounce out. It's probably going to look like an inverted head and shoulder if it went that route, right? So we keep this door open because it's not impossible. But if the goal is to trade low and not distribute, then it's actually better to kind of stay beneath maybe this first or second creek, although I think probably the first creek is better, and then work it out later as you come back down and trade this area. Remember the point of a spring, right? The point of a spring is to do a lot of things. One is to cross the creeks, right? So you're getting liquidity that will help you to jump some inevitable creeks. Unfortunately, we've come down on this like arc, so we've got a lot. Like, there's creeks all the way out, you know, on this angle, all the way out to like 472. If you're going straight up, all the way up to 493. There's 1, 2, 3, 4 that haven't been crossed yet, and probably could add to that number 5, which is kind of the major one up top. It's a bit more invisible. It's a bit more like a parallel, but I think it's there. It's kind of the overlying one. And it'll be a combination of like 4 and 5. It'll be in this region right here around 493, which I marked off with a green and gold on my chart. That's kind of where the big moneymaker confirmations are. Like, for me, it's going to be in this little pocket when it really picks up steam. If it breaks out here, this is where you'd see it pick up some steam, okay? And it won't do that. It won't come up here and break out here unless it's ready to go. And that's the cool thing, is that if you do see that happen finally, again, it may seem like you're missing out or something if you don't buy really low and try to catch a knife here. That's not really the case. Like, coming back up to 5, I don't think a lot of people would bat an eye. I think a lot of folks would just think it's going to reverse anyways. I don't think you're necessarily going to see volatility spike that much. And I mentioned before that I think that the bottom at latest is probably October 4th, but it takes, you know, about 9 to 12 trading days or so to really kind of build out a bottom. And you can see from where we hit low, 12 trading days, this is 12 days, but I need to count it out. October 8th, I don't think that's right. 1, 2, 3, 4, 5, 6, 7, 8, 9. That's 9. So sometime between the 8th and 10, 11, 12. The 8th and the 11th. Yeah. This is just on average, okay? Like, on average, it takes 9 to 12 days by the time you hit the low to really work it out. So this could take up to, you know, another week or so for sure. I don't want that to discourage you. It's just the nature of it. So the fact that these are fanned out that way makes me think that we're going to take all the time that we need going across here. So part of me believes that even the way that I drew this may be a little bit overzealous. you're like, man, you just keep like pushing it back. I'll be honest, ever since we kind of took a hiatus here back in August, I haven't really felt like there's been that many great opportunities to kind of take off. We've had two major opportunities. One was on August 15th, where we didn't make the cross up, and it's the classic like pump up cattier kind of business. But it made that low first, right? And then this advancement really was just a nail in the coffin for that range. It wasn't like this push over 520 did not occur to me, like, meaning I didn't think that was the way it would move anyways. Like, I was back here thinking we were going to move up to maybe 511, then come spring. When it went up high, it was almost immediately like, well, you got to go or you're going to drop, right? And that's just the nature of what that is. Again, you don't want to see that same thing right now. You don't want to see that kind of push up, premature push up above the 460s unless you're ready to go. Unless you're ready to hold these creeks. You start pushing up and then breaking through creeks, you're going to just dive low, much like we did back here. So really the two main areas that I've seen potential for any kind of run up are here, and that's, unfortunately, both of those had that early pump with then a drop to a low, and before they tried to react back up and then failed on the cattier cross. They didn't jump over. And that was what we were talking about yesterday here, that it didn't have that jump. They just stopped. So when I look at this, I'm not looking at the timing as necessarily a problem. And I think there's some folks that are really, really upset because, and I got to be honest, I suspect that this is probably like true for everybody who's doing any kind of analysis on this, is that there's probably a long-standing frustration with the targets kind of feeling like they're getting moved around a lot. And I got to just be straightforward. Like, my expectations were like a lot more fixed up until about August, and then it just kind of floated away from me. I don't really feel like there was there's not really been any really solid targets, because aside from FOMC, which is just kind of we could call that like a catalyst target or something, maybe the GME earnings or something like that, there's not really been much to look at. When we were building out in this range coming up, any kind of early chance we had at a reactive move kept passing us by, and we had like two or three. Once this iteration started downward, it was pretty clear they were trying to drive the stock price down. And then once you get to this point around August 12th, my thought was we're going to start working out. And I don't know if you guys recall, but I did like a series of estimations on what I thought might look like if we were to break out around FOMC. And there was a lot of kind of like negative, maybe, surrounding that, because it felt like, at least for me, I'm like sitting here doing it, I'm like, well, look, the way this is kind of building out, and I think I did it like this, you could have this kind of slow slog. It's sort of similar to what I drew, but I had it going up, like where you could have this really slow, kind of boring, I think I had it like this, slog to the upside, and you wouldn't have to go anywhere. You could stay all within range. And I remember thinking, like, in the back of my head, like, this is unfortunately like probably the more realistic, because of the way this has been going. We haven't really seen any kind of preemptive action to like get ready to move this thing early outside of some of these particular moments where you might have those opportunities. It just hasn't really happened. So now we look at this now and you're like, well, that didn't happen, Booksy. No, it didn't. And a lot of it comes back to this motion right here. It's kind of simple. I mean, I hate to be that guy, but it really is it's this particular motion right here that killed us. It's that push up on August, or the 23rd and the 26th. That's really what got us going back down. It was that early attempt to try to cross that just failed. And I don't think, when we say attempt, you might think in the back of your head, well, they know what's going to happen. Like, institutions are aware, and Yeah, maybe to some degree. You know, I think from maybe an algorithmic component, they're probably not actually aware all the time. It would be like impossible to reconcile those two things. We talked about this a little bit yesterday. But like some people think that, oh, it's all automated, and other people think that maybe it's a little less automated or whatever. Somebody's putting inputs in or this or that. I think it's a little bit of both at different times. I'm not so sure that if the goal here, it's very difficult. It's a difficult question to answer. It really is, because you have to imagine that there is someone out there who has to kind of monitor these positions. And you know that the institutions, the powers that be, the bigger guys are going to be a lot more confident in their position, right? Like if they think AMC has value and they buy it here and they're looking for that big change of character or whatever, they must think that the alpha operator, the EMU, is going to take it to the upside. So they're basically, if you're kind of clicking A or B program, you'd be clicking, all right, accumulation. But when you look at their 13F filings, it's not like, it's never obvious, like how are they buying, right? You don't really know. I've never worked in an institution. I don't know exactly how they do buy stuff. I don't know if it's like they put the orders in and then just wait and they go to the dark pool or whatever until they're paired up or what, right? I have no idea. And maybe there's information out there about that. But I imagine that if you're buying like 30 million shares, you're probably not doing it all at once. And so it's time consuming, right? So you're putting that in, like this is the order that we want to fulfill. And your algorithm's going about getting you the prices that you want, averaging it. And I'm thinking nowadays that it's probably not human buying, like in terms of like how they buy. It's probably part of their program. Is like their algorithm is not doing something just randomly to move the price around. It's doing it to get whatever outcome they want. So if I want a bunch of shares and I want to average $5, okay, let the program do its thing. It's going to take maybe this much amount of time. And then I don't know how much involvement they actually have. So I mentioned that because like when I see stuff like this, I have to just kind of take it at face value that both things are true. Like, and I think that that's probably the healthiest way to look at it. Like it's both a failed attempt to drive the price up and it's also like a controlled upthrust. Does that make sense? So it's both a failed attempt, meaning like it wasn't predetermined, right? And somebody somewhere, some buying power is trying to, whether that's retail altogether or some institutional buying going in, they're trying to advance, but it's going to fail. Maybe the outcome in some ways is already known by certain parties, certain algorithmic, let's call it, those quantum computer programs, right, are like probably aware, like, hey, we're not done with liquidity yet. So there's a controlling element to that. But I don't think everybody's aware, so I think it's both. I don't think that every single entity that trades these market things are all like everybody just knows exactly what's going to happen next. I don't think that's true. I think it's predominantly driven by a single operator with a lot of other operators that kind of make it look the way it looks. And that's the behavior pattern that we see. So I look at this and I'm like, yeah, it's both. I don't think that's wrong to say that. I think it's both a failed breakout and a very controlled UT to kind of drive the price back down. So when I look at something like this, you might look at it and say, well, Booksy, you just got it wrong. And I look at it and I say, yep, I did. I did just get it wrong, but this isn't meant to justify anything. It's just meant to like help me to learn better. But I know like where it went wrong, right? Because we talk about this all the time. This is the big push up, right? And if it doesn't continue, this is the cat ear cross up, we call it, or whatever we want to call it, right? And if it doesn't continue, then it doesn't go. If it doesn't jump the creek. That's exactly what happened right here, right? It pushed up and then it came back down and then it tries again and it doesn't jump the creek. And you basically have this perfect example of what we're talking about, right? This does not necessitate necessarily that you're going to go down, because this does happen in an accumulation range at times when you go for a spring. And then we see this reactive move, you know, back to the upside to find support, and obviously jumping the creek, and then we leave. And this is all over the place on AMC. You find this kind of pattern everywhere. March is one of the easiest ones to see it. It's just super clean. I use it all the time as an example, but 2020 is the same exact thing. It just has a really high appearance to it, so it kind of looks weird because like it's trading up high a lot, which is fine. It just has like a different vibe to it as a result. But that kind of movement is really typical in the market. So there's a sort of early attempt to jump that we failed back here, and then here again. And again, you can see why, because both of those, this would have been the localized M1, 2. So this is a number 2 on this first one, and then this is a bigger 1, 2, and you failed right here. Both of those failed to jump. Makes sense? Okay. I find often that understanding of how the market likes to, let's just say, or whatever you want to call it, how it likes to operate in terms of those creek jumps is actually very consoling to me, because I can see it and I don't feel like I'm completely lost. Like, I know that's where those attempts were. I can visually see like why I think that. This is also a number 2. So this is a 1 and then a 2, right? And then this is a bigger 1, 2. So this is a 1 and then a 2. Yeah. And then this is a bigger 1, 2. So you're starting to see like the pattern here. 1, 2, and you see how each time we get to 2, it's like, oh, those were the times that we could have crossed. And you see the attempt even in the midst of those moments, like here, and this one was really weak, but it's here and then here, right? And that's all there is to it. There are attempts to kind of jump up, and it makes sense because you're talking about waves. It's another way to look at it is like, you get a wave up, you come back down for support, and then you try again. And that wave up hits that creek, right? And then the try again moment, this is where you have the key moment of, do I jump or not? Makes sense. It really does. It's super simple. There's not some kind of special knowledge that you need to have. This isn't some kind of secret knowledge that you have to pay $200 to $400 a month for, or something ridiculous. Okay. I don't understand why people charge for this kind of stuff, because it's super basic, and it does not need to be any more complicated than this. Like, if you're trading the market and you understand this, you're not going to fall into the traps of head fakes and junk, right? You're going to wait and see. And so everything kind of boils down to these moments, and we've had three major ones since August, and those are just the working out of what I think are essentially like this iterative shrinking that happened. Again, like that wave 1, wave 1, wave 1 kind of nonsense, and we're getting wave 2, wave 2, wave 2 kind of nonsense. And because it keeps turning down, you know that the big macro picture is obviously going to try to go low for some kind of spring. So you're looking for those levels. That's how I've been operating. And I haven't really been focusing very much on timing until, you know, I mean, I always try my best to focus on timing. I want to get it right eventually, but like, it's not like my primary focus. So if you're somebody that's trying to play short term, I can't necessarily help you very much, because I'm waiting just like you are to see that confirmation, and I don't want to trade it until I see that confirmation, because frankly, when it hits, it's going to hit like a freight train. But until it does that, it's going to be painful, you know? You're going to have this kind of build outs like this where you're driving the price down in a parabolic motion, and you get these series of widening creeks that you now have to jump over, and that could take a lot of time. We're talking, again, 9 to 12 trading days is a lot of time, you know, to be stressed out and trying to like catch a bottom. Instead, if you understand like, all right, here's where we have certain moments of possibility, we can look back at this and say, all right, here's where we would need to see this breakout go early if it goes early. Here's what we would want to see if it stays low. And everything else for this is just, then what, right? Then what? Well, then you're going to kind of break out and you're going to hit these key levels, right? And on the big picture, it's important to note, like, this is still probably the most important region right here coming up. I called it the ice at one point. It's like a rising support as it went along the range. Eventually, we broke it at 504. This was kind of a bigger, I want to say it was a big change of character, but it sort of changed the behavior of the stock, maybe temporarily. It kind of started really back here on August 15th, but where you basically have now a new pattern of kind of breakdown, 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 because you're driving the price low on the big picture for some kind of a spring action or something, and or an LPS, we don't know, depending on the time frame. So like when I look at this, I still look back and I think about this level right here a lot. I think about this like pretty much every day I look at AMC's chart. It's a simple enough equation, right? When I look at stuff like this, because I think about how, like we just talked about it, and I think about how, like, in a lot of ways, this tends to be the case where you get this like push up, right? And you get this push down, and this is what we're experiencing. We push back up and we've been kind of pressing back down. And during that push up phase, you end up with a rise here, usually. And there's some supports. You know, this isn't obviously going to be a perfect arc. It's going to have like bounces and junk. This is basically what we're experiencing right now. And we've talked about this kind of idea with sine wave theory and like how this usually indicates like roughly where the low is going to be. And then typically there's like a halfway drive through here from here to here. And I was looking at this the other day like, well, I think this is pretty close. You know, if you look at where that 50-50 is, it does go down to basically 432. And we looked at this big picture about a week ago now. Maybe it was like Monday. I don't know. Feels like forever ago, right? I don't know if I would include this first wave. I think the second one is probably sufficient because this is the actual cross here, like 1 and then 2. So this is ear 1, ear 2. I don't think this, which is, I call it the paw, right? Because I'm a goofy man-child. Because I think about it like a little kitty cat ear. This comes from like Bongo Cat meme or whatever. Where the Bongo Cat's like got his hands up or whatever. And yeah, and then that's pretty much it, right? So it looks like a cat with his paw in the air, like raising his hand, like, ooh, call on me, call on me. Okay? And I don't usually include that paw motion because that's not the wave that's crossing over. It's just a bouncing wave, and then there's a wave that crosses over. Well, in theory, you would be able to at some point take this and derive, and like when it's all said and done, we'll look back on this and it's probably going to be annoying because we'll look back on it and we'll say something along the lines of like, well, it was super easy to tell when it was going to take off because all you had to do was do this or all you had to do is do that. I believe that generally speaking, all right, if I were going to give you like a rule of thumb, there's 2 lines that make the most sense to me on these kinds of charts. And unfortunately, I think the operator at this point knows this. That this has been largely discovered on AMC. You might say, well, no one's watching you, Booksy, and just changing the charts because of you. No, they're not. But what I mean is that I think there's an adaptability, and when something works well, they just keep doing it. And when it starts like kind of being adjusted a little bit as it goes based on who's trading it, and I'm not saying it's just retail, but I get the feeling that they're obscuring a lot of that with the volatility here. We talked about this little midsection around July 24th. This is whack. Like, this is one of the weirdest middles I've ever seen between ear 1 and ear 2. It almost looks like a whole nother ear. Like it's a whole nother push-up because it comes so high. It's crazy. And if you look at the other sections like that are more regular like this, you do not see something like this. It's just not there. It's out of left field is that the way I feel about it. And so there's been a lot of that kind of stuff in this little middle pocket here crossing the middle. It's been very difficult. So it kind of obscured the pattern. And part of me wonders if that's intentional to like mislead retail and not knowing like, oh, this is a pump up. And I remember being kind of excited and then kind of worried, sort of back to back when this happened. I was like, this is not looking right, you know. It started dropping down. You're like, well, nope. And you're like, what the heck's going on? Why did it go above the top of the range? And then it went really low, and you're like, I don't understand. And then you start mapping. You're like, okay, so this is just a gigantic double flush, you know, that's potentially defining like a floor later. And we don't know what to do with that in terms of a pattern because it doesn't fit the mold of this kind of simple breakdown. It's like you're putting in the middle of this just this massive up thrust, down thrust motion, and it's confusing, okay? But normally, this is what I would look for. It's not complicated. I would look for this, and I would think that this is some kind of a, I mean, it's kind of confusing, but I would look at this and say, well, there's, you know, a cattier breakdown or whatever. This is kind of like what we have. And I would look at the triangulation here. I'm going to recolor this like red and red. And I would say this is likely pointing towards a future wave top. The issue isn't that that theory itself needs to be proven or something. It's not really something that I feel like needs to be proven. Because if the wave breaks out over this creek, this will be the general target. This is the triangulation, right? So usually this is the simplest way to look at it is like, where does this triangulate? Because if you're going to go up and get an SOS, you're going to do it here at the top, right? And you're going to also jump this rising creek. Now, this is nothing new. We've talked about this before on this channel. We talk about it all the time, right? How do you get from here to here? Well, you jump the creek. Like in the grand scheme of things, if I was looking at this, and I think this is a Wyckoff schematic, we probably would define this as, you know, pretty simply like just a spring with a retest. And sometimes this could be really low, you know, and the spring has to, of course, jump the creek, right? And this is where things get kind of complex because we look at this and we're like, well, that looks super simple. Why can't we just do that? It's like, well, I don't know. You know, typically this is what happens is that you're going to just jump the creek. This is that 9 to 12 days. It could be very, very fast. And then it accelerates through the whole range and reaches the top very quickly. That's basically what I have going right here. That this would be that creek jump right here around 490s, and then you just accelerate to the top. Okay? So in theory, when you're talking about timing big picture wise, this would have been something I could have used as a metric way back to say like, well, I think that it's going to hit some low around the 430s. And you're like, well, Booksy, you said 460. Yes, I did, because the PNF and other things made me think, and I still think, that that's the better floor. Like in terms of a range, when you look at this, where have we traded off the most? We've traded off that 460 the most. So we've really traded very high here. We haven't traded low, which may be the whole point of all this, is to come down and get to this low and trade. But this is kind of back into a previous range. So this is not ideal for me because I'm like, I don't really want to be trading in a previous range. I want to be trading high. Like I want to, if I'm accumulating, I want to trade high up and keep it that way, right? So anyways, when I look at this big picture, it sort of falls into place that, sure, like it's somewhere around this October 4th to 8th area. You know, obviously there's a 4th to 7th kind of gap because of the weekend. I think it's a good solid like 50-50 around this line, kind of like what you'd expect here. Like roughly there should be a 50-50 right here. How did I draw it so well? It's not hard. It's just the sine wave because that's the top and bottom of the sine wave. What? Yeah. Also, I'm a visual person, so I tend to proportionalize things pretty well. I always make fun of myself in the back of my head, like, for being like so particular when I'm drawing things, but then I'm like, yeah, it makes sense because you want it to be right. But this should be right. You know, this should be about a 50-50 on that wave down drop. And then it should be about a 50-50 on the creek out too. When you go back out, it should be about a 50-50 right back up. It's not always that perfect. Sometimes this creek is a little bit wider, sometimes a little steeper. Waves in the market are not perfect. They're close to it, but they're not perfect. all right, well, if you knew all this, you could have done this, I don't know, back here on August 28th, right? But you got to remember, here's where I was wrong, right? Remember what happened back here? I did the same thing, but I did it higher up. Some of you will remember this because you've been hanging out for a couple months here. We did the same thing back here. We just used this as the ear 1, ear 2. We basically thought that this ear 2 was finished. And when we did the wave out, it didn't look like it was going to continue indefinitely. It looked like, well, it may end up waving shorter. And we even did like a symmetrical build out, and it looked really symmetrical. It wasn't like accidental, you know. And then these two waves were also the same. So what makes you think that now is the time, Booksy, as opposed to then? Well, I guess the big picture is that essentially like this right here has to be this, like can't be anything else. So at this point, there's not really there's no more speculation needed in that regard. So if we have that rise and we have that breakdown, you don't have to question whether it was back here on like a steeper angle or this or that. And I could probably go back and critique my own work all day. I'm not going to do that. And see like, where did I go wrong with measuring this out? Like, how did I assume, what did I assume that wasn't true, you know? And I think a big part of it was that this first wave was that first cat ear, like that it wasn't a paw. Because I think I had already imagined that this whole thing was the paw. And you guys are like, well, that's a stupid way to look at the market. And that's going to cause you problems, Wixie, if you can't identify that. Yeah, I think there's issues with it, right? And that's the case of any kind of fractal or pattern analysis. You could be sort of stuck in a groove of, I got to know what to expect. And if I'm thinking it's this and it's really this, that's a problem. Your timing is going to be way off, right? There's nothing else about it, you know? And then when you look at this big picture, it's like, again, here's where Booksy makes the same exact point that he made before, which is if this were ear 1, this is ear 2, this would be where that breakout is. We just illustrated this right here like 3 times. You can see it visually, this move, this difference. So naturally, like, sorry, I'm gonna move this over here. If you have this kind of confusion, you're thinking this is that jump, then you're likely to think that if we were to push up here, I still think it's possible, it's not like impossible, that this could have come back down. And this is where waveform analysis is dependent 100% on confirmation. You cannot trade this with an expectation that you have some kind of pre-scripted hieroglyphic that's going to tell you the future. It's not like that, right? Like in order for this to be successful, I don't know if you guys remember this, but I do. I remember thinking it couldn't come down again. It could not break down again. It had to hold here. This had to be an SOS with a backup, and then it had to advance again. And I would have been like, sure, that's totally possible, because this would have looked like a cat ear cross up to me, you know. And when we pull this out of its little shell here and just look at it and observe it, I don't think any of us would look at that and say, that doesn't match the motif like it does. So the issue isn't so much like that the theory itself is wrong. It's that the theory itself requires, the waveform analysis requires patience. It requires that you wait for confirmation. And when I look at stuff like this and I say danger zone, or I'm like looking at something like August 15th or August 26th or September 13th, and like all of those areas where we had possible moves, and then it doesn't happen, it's easy for a critic maybe to come back and say, well, you're not definite enough and you're not right, so I'm not going to listen to you. But that's not my approach. If that were my approach, then yeah, I think I'd be wrong all the time. Because if you're always saying this is the one, this is the one, this is the one, instead of this is possibly the one, and there's a big difference, then yeah, I think frankly there would be no recourse for it. You would just be like, yeah, okay, you're just wrong. I'm not try not to sit in judgment of other people. I'm curious about what other people are doing that makes some folks really angry, you know. I've been hearing a lot of anger just quietly behind the scenes, coming through this chat, through Discord and other stuff about the AMC price movement and how like people feel like it's being continually kicked the can, but it's like it hasn't, in my mind, it's never done anything that's confirmed a move. Just has not. Have we had good bottoms that we've called out? Absolutely. But then we've had to call out tops on the waves because it's obvious when they're topping and they're not going. Like every one of those was a top. Like if we went back in time, we looked back and looked at these were all the tops that I said, this is not looking great. It's probably going to drop. Why? How could that be the same as the same spot that you say, because of this, right? That's what I'm trying to explain. So if you understand like where I'm coming from, you understand why I think that on the big picture, this has been largely very frustrating. And we're looking at it now and you're saying, well, why are you saying this word spring again? Why are we talking about this again? And I'm not trying to repeat what we went through yesterday, but like, this is why, because it's continually worked its way through the larger picture. And now you've got to position yourself in the shoes of the operator in the drive that took them here. They've already made it very evident and clear on these quote unquote year twos that they're not going to advance it until they get to a particular low. And we've got a setup that kind of builds out sideways here for quite a bit. So there is a possibility of early advancement over 460, but it has to hold. And then beyond that, when we talk about timing, really just looking at this macro wave. And I'm going to go ahead and delete one of these. We already know it's there. Hopefully you guys recognize that. I'm going to delete a couple of these things real quick. This is to kind of declutter the chart a little, right? And if we were looking at this big picture, I'm going to keep this little zone right here active. I'm going to keep this because I just did this one. I don't want to lose that. Not yet. If we were looking at this and we were saying, where do we think this is? I don't think it's that complex. I think it's probably pretty straightforward. We have this guy right here, and I think this is probably one of the better ones to use. This is one of those parallels, and there's a couple. These two are the biggest two that I would probably defer to in terms of like those downward motions, okay? So there's a bit of an arc. We can't deny that. It's obviously not a straight line like this. All right, are these going to be active as creeks later? Probably. So if you've bared with me in order to kind of see the answer unfold, we're going to try to do it. But I'm not saying it's not possible to do it. That's not what I'm getting at here. I'm going to try to do it, but I want you to keep in mind like the build out for this may be a little bit unexpected, right? It may not exactly be what you think should or shouldn't happen, including myself, right? And it's challenging. It's a challenging thing to like sit here and try to like critique yourself and say like, well, how has this changed? What can we do to better understand it and to not be sort of stuck in our ways? We know there's a big wave coming through here. That's this big orange line. Typically, if we hang off the wave and we push away from it, we might get a spring. It's possible. So that looks confirmation right here, this drop from 498. So I'm going to kind of keep in mind that there's like a heavy amount of buying at this point. The heaviest amount of buying looks like 498. It used to be in the beginning, it was like 485, and then it slowly rose to the upside, right, to 498. So it's kind of cross trend that's kind of rising. That just tells me like maybe there's a slight upward angle, slightly upward angle, right, on this wave pattern. Okay. And then beyond that, we're kind of looking at this as a fairly black and white, straightforward, like creek crossing. So we also have confirmation here to some degree. The initial sign of weakness on that ice, there's one big one way back here on the 5th, but the real teller was the one on the 23rd. It kind of pushed through and then it rose up, broke back down. That happens to intersect that high liquidity right there at 498 as well. So you can see that motion down from top to bottom here, right, on that wave, goes through that middle. So at this point, I'm pretty confident that that's kind of like the main trajectory. I think most of us would look at that and say, sure, it looks about right, you know. This is the one that most closely resembles the 200 SMA. Okay, we've talked about that before. So you're like, well, where did that come from? Well, we've had this one before, and it's really similar to where that 200 SMA is, because remember how it whipped around the 200? That was the one that kind of defined, I think, a lot of this trajectory down. If I'm looking at this as just like a 50-50 termination point, and I think that, for example, it has to go through that particular middle, all right, if I think that's where it is, then it would tell me that this doesn't actually go anywhere until October 10th. So immediately you're kind of like, well, what the heck, Booksy? You just said October 4th. Yeah, but I don't necessarily think these bottoms are like exactly what they look like. What do you mean by that? Meaning I don't necessarily think like it has to hit this point at this particular point in time. Like, it's very possible that this comes down and it does a spring on Thursday, October 3rd, not Thursday, October 10th. And after it does a spring here, it comes back out, and then this is like a takeoff point for something else. You know what I mean? Like, we're just talking about like the general bottom and the general top here. So we're not looking at this like, oh, it has to be this particular date and time. We don't want to do that to ourselves. That's a bad idea. All right, we got a window. It's pretty close to this other window we looked at anyways, because remember we said this could go all the way through like the 10th. So it's kind of lining up, isn't it? Yeah, it is. That's good. So there's a second kind of opinion there. First opinion was just doing the wave down. Second opinion would be, you know, the build out 9 to 12 days. And that gives you the same window of time. So when we look at this, I think it's important to note, like, good, we have a second opinion already. Came from a different form of analysis, different kind of understanding of the timing of the market, and it seems to line up. That's a pretty good thing. That's not bad, right? So we've got this sort of window over here. I think this little blue, I'm making a blue box now, is a pretty solid window. It's basically right in the middle of where we think that intersection should be, okay? So one of the problems that we've got is that's just a trajectory. That's like us putting over here on this little diagram like, oh, that's just a trajectory down. We're doing our best to kind of identify the pitch, like how steep that angle is on the sine wave. It looks like a cross. It kind of is. It's almost like a crossbow, right? Where you've got like a crossbow like pointing towards where the top is going to be. You guys are like, ooh, I like that crossbow. Yeah, it's cool. I don't know, it's cool. I mean, we can make it look like a crossbow if we want to do it. That'd be fun. Why not? It probably would look pretty right too, because this has been an arc lately, hasn't it? There you go. So there's your crossbow coming down. And you would expect there to be a reaction, right, back to the upside if it's going to break out. This is obviously has to be like a spring, right? We've talked about things all over the place on this chart. We've been all over the place. Sometimes it's been really easy. Sometimes it's been confusing. We got little rules here and there that help us to identify those points. So we're going to use some of those rules. We're not going to just kind of like sit on our butts and not do anything. We're going to try our best to do the best analysis that we can. Okay? We're going to use big picture and small picture as best we can. So this is the best I'm going to do with timing, and I'm saying all this stuff. I built it up quite a bit, maybe a little too much. Not trying to fill time. I'm just talking. Very talkative, right? I'm not trying to just do filler. I was trying to build it up so you understand, like, where is this coming from? Why would I maybe adjust the timing? And then why would we still need to be a little bit skeptical, even if we get it kind of right, a little bit skeptical, because we know that there's imperfect human error possible, especially with these kind of creek formations, right? Like, it's totally possible we get it slightly wrong, and then you're off by like a week, right? And at this point, I think it's safe to say that we're close enough now to the actual event. We shouldn't get it way off, but still. This is the bigger question in my mind, is I don't know exactly where the creek is. I think it's somewhere within this range right here. Okay? I can't figure out exactly where it is, and I'm going to be comfortable enough to just say, in my uncertainty, to say I'm not 100% sure where it is, but I do think I'm like 95% sure it's somewhere within this range right here. Okay? This little triangulation that I just did. Good? I'm also like 95% sure that we're going to have to pass through the liquid center around the same time. So this liquid center, I've defined it as 498 down to like 485. I think that's about right. In the middle of that is about 493. So now we've got like a secondary triangulation. Okay? So you have a creek. You've got a pretty strong chance that it's going to triangulate somewhere in that range, because that's where it has to make the jump, both of the creek and also the support and resistance levels. So we've got a little pocket right here. Quite a bit of time, but there's a pocket. At least we have some narrowing of it. That's good. Then we've got the high. Now we need to triangulate the top. So this is where things get a little dicey, in my opinion, because I've been back and forth about this. But I will say that as long as you look at this as just a simple range and you don't try to overcomplicate it with like all these secondary push-ups, it's pretty simple in the way that I would describe it. The top as being around 472. Now that value's come up before. We've heard it before way back here. I think that's basically the top. All right. The reason that I say it's a little complicated is because sometimes your operators are actually driving the price above the top, and they're using the tops to kind of mislead you and think that, oh, that's really the top because it's hitting the highs there. But in reality, you can see back, this is kind of my only major concern, and this is the 550 mark. And I've bounced between these two quite a bit because technically these get kind of negated. These tops get very negated in something like a P&F chart. They don't even appear. And the real tops are right here, which is where the sideways trading happens. And that's at 550. So we've got two possibilities, right? And you can see already there's a problem, because one possibility would say, oh, well, then we should be up high on October 7th and 8th. Well, that's what you want, right, Booksy? You've talked about this MPW coming up and being at a high on October 7th or 8th. Maybe it's the same for AMC. Sure. But that's just my own bias, my own opinion based on something that I drew out a long time ago. I don't think that that's necessarily where it's going to hit, okay? I just think that, like, that's a possibility. There's a tiny little window here where you can see there's a decent intersection of, I'm going to have to make this like a different color so we can visually see it. Whereabouts are the next one? Okay, well that's a little more realistic maybe in terms of like timing, because it's kind of a bummer. It's like way out there in mid-October, but there it is, right? And this kind of, maybe this particular way of looking at it would assume that it's building out into a November move by positioning itself potentially higher, right? And then neither of those has to be, and this is kind of where maybe it falls apart a little bit, but neither of these has to be where it hits either. And it's frustrating for me because sometimes these act more as pivots, like on the low end, and they're not actually like highs, and you hit the high like slightly after it. Like it pivots there and then it comes back up. Okay? So when I look at this, I'm not trying to be like super predictive on that in terms of like when it hits the top. I'm just looking at it in terms of like a waveform. Like, does that make sense? So hopefully that makes sense to you. Timing wise, we're going to have to get something kind of similar to what we talked about over here, which is you should have, to some degree, consistency in the waveform 50-50 markup kind of mentality, meaning there should be about a place right here if it works correctly, where the first cat ear hits the bottom, this should also cross the other creek this way about 50-50. Confusing, maybe, maybe. If you understand sine waves, it's not that confusing because you're talking about wavelength, all right? And you're talking about position on like when it basically when it hits. So let's go ahead and do that, and let's see if any of those triangulated correctly. And they did. So did we mathematically, geometrically map this out correctly? The wave. Yes, we did. Where is it hit the middle, Booksy? You tell me. You watched me do it. I didn't fudge it. I'm not trying to like make things, I mean, it is a show, technically. But like, did we do it right? Did we measure it out correctly? Yes, we did. So what's the most realistic date for this to kind of get to the top? It's basically smack dab in the middle of this little range that I built, which is just kind of an average. And the most realistic place of entry, if you will, is October 22nd. That's far, isn't it? Am I happy with that? No, not particularly. Is that pretty far off from what we originally talked about? Yeah, that's pretty far off. But I'm not here to make myself look better in the past tense. We're just going to do our best to make sure it's right in the present tense and looking forward. So when I go here and I look at this and I think about, well, man, that's way far off from what we originally anticipated. Yeah, that ticks me off. Okay. Clearly that would indicate that Booksy was wrong about some of the earlier moves and those potentials. Of course it does. But does it work? That's the bigger question. Yeah, it works. Irrefutably it works. Now, I've done this rotational symmetry kind of stuff before. I'm not a huge fan of making it like a poster child for the stuff that I do on here because it's a little bit inconclusive, meaning that there are times where I feel like this doesn't really work as well as I'd like it to work. And then there's other times where it's like super awesome, you know. Basically what this would be is, and I use this all the time, you've probably seen me do it before, but you measure like the initial wave up, and then that should equal the wave back up. It makes sense because if you think about this move, this first move here, this should roughly equal the same. Hang on a second. It's just, again, sine wave logic. It's triangulation. Technically, it's like trigonometry, which I know some of you guys are like, what? I don't want to do trigonometry. But it should roughly equal like the same distance because it's basically like the wave height, right? So if you do it right, in theory, it would be the same. It should come right back here. Sorry, I moved it over. It should intersect at the same point on that box. So looking at it another way, hang on a second. I switched over to gold on accident. Looking at it another way would be to look at this and say, oh boy, we're slugging now. What's going on, Booksy? Don't know. Just had a lag moment. Another way to look at this would be the box here. If you have a box and then you have a line that intersects the box through the center, that this distance and this distance should be the same here to here, right? Should be the same as here to here. It's just simple geometry. And it's true that if you had a wave that went through here, you would expect there to be a sort of a symmetrical nature to it. Makes sense. So when you remove the measurements, you're just getting like a wraparound. That's like a 50-50 wraparound, right? See it? Okay. So it's not an overly complicated way to do a measurement. It's just simply a sine wave measure on the move. So it's another way to kind of triangulate something. So what we can do is take that first measurement right here and then apply it backwards, and it should match up if we did it right. And again, we know that we did it right because we already measured it out and it was in the right spot. But this is just further confirmation that we probably did it right, because there it is right there. And I actually made it a little bit, I don't think it's that off. Well, it hits the box, so that's important. It's where it hits the box. Here, I can fix it a little. It should intersect at the same point. So again, this is like a trellis. This isn't the vine. So you can't use this as a way of saying it's going to go straight up right here. But sure, it's pretty darn close to October 8th and 9th in terms of like where you may hit an ultimate bottom. Notice that there's an earlier move here, and there's another one right there. There's multiple ones. There's 3 on this top. There's actually like 3 tops. So each of those, again, this is maybe part of the reason why some of this can be a bit confusing. Each of those could be part of that rotation as well. And I don't like that, but it is what it is. So we may have just hit the first one. Yeah, right there. So this is like rotational symmetry in motion. So there's the first one that was hit here. You may hit all 3 of those because there's 3 pivots on the top. You're like, this is getting complicated again. Your chart was looking neat, nice. Now it looks crazy. Well, it is what it is. Like I didn't put that there. It's just, that's where it is. So I'm just adding it because I think that that's appropriate to add that pivot. Get away. Goodness gracious. Growling, hissing. Crazy. Sorry guys, my cat's growling and hissing, my other cat. He's literally just sitting there in his perch, like sleeping. And she's looking up at him, growling and hissing at him, like he's about to jump on her. He's clearly not. He's taking a nap. He's like the Garfield of my cats. He's fat and lazy, and all he cares about is eating. And then occasionally he messes with the other cats. Anyways. Right, so like these pivots are not necessarily going to be perfect, but it's probably appropriate to keep those. I can definitely see that gravitation towards them here and here, the anchoring on them. Yeah. Huh. Yep. So, here's what I think this pivot right here represents. Probably represents the low. So like kind of the midpoint of the low. You can see that the October 4th is certainly lining up quite well with the secondary pivot we got around the 5th, or around 550 right here. I think that makes sense to me for a couple of reasons. That this would be potentially like a low pivot. But what that would tell me is that, again, there's a strong potential here that this range, as I've built it out, could be quite right, but that we may not see, I mean, I hate to say it, we may not see a spring until as late as the 9th. It's very possible. So if this were to play out in a much larger format, you might even expect this to go like sideways a little more and then come back down real slow like. And sheesh. Yeah, it could be much slower than I anticipated. What a boring slog that would be, wouldn't it? So when I look at this, I have to kind of take into consideration that possibility. And I don't think it's way out of the question. that we don't hit the final creek area till later. There's more than one way this can go. You could break out and go up here. Like this could be an early break that then rises in like an accumulative fashion, which is more consistent with what I've seen on AMC, as opposed to sort of this sideways that just takes forever and then just goes. We usually get this kind of sideways chop upward motion. I call it an ascending accumulation. Basically all it is a series of creek jumps that release the pressure. Just basically it's a buy-in essentially. You're buying in, you're letting go, buying in, letting go, buying in, letting go. Usually at the end you get kind of like a final dip and then it takes off. Yeah, so this may be more accurate to what we would probably expect. You can have a similar timing, but and it would all be like fans from the top. Do we do that there or we do that higher up? Maybe it'd be better to do that higher up, like here. Get back to the top. Man, it's hard to say. It really just depends on where we're most comfortable trading, like liquidity wise. Part of me thinks that it does do this higher up because I wonder if we need to get back to that creek jump. Usually this approaches that final creek jump here and then it relegates back down. Yeah, maybe more accurate. So, all right. So part of me thinks this is going to be like a slower build out that maybe just goes sideways and stays low the whole time. If the goal is just to kind of trade across that bottom, I could see that as a possibility, just to keep it low as long as possible and then just take off. In which case it looks more like a double bottom, maybe with a slight dip into a spring at the end. More akin to kind of like the 2020 picture. This looks a little more like the March where you get a much faster reactive move and then it breaks back out and the ascension is really built out to drive the price across the existing creeks to get back to these more critical levels. Yeah, so this would be like the one where they jump too high and it doesn't look like it's going to advance and then it's like parabolic and then it drops back down. This is probably where it happens at like 493. Then you get a bigger drop to check the creek. And then probably from there it just takes off to the upside. So that to me looks right as well. I'm just imagining the way it travels, that's all. Nothing really fancy here. Trying to get this visually to look right so I can see them. It's too hard to see on this chart the way I made it. Let's do that. There, it's bright enough. So in either case, you probably have a bottom between October 4th and October 11th. It's not actually at the end of that because you're making room in the wave. It's not actually at the end of this box here on the 22nd. You're making room at the end of the wave for the reaction. And then the question is, does that get you high enough? Is it high enough to break out here? Well, the answer is no. And so again, it's like, well, why would you then advocate for that? Wouldn't you want this to be back here so that it could get above? And if you do that, it's like perfect, right? Sure. So again, it's like, I don't really know for a fact that it's not going to just take off right now. And in some ways you might argue, I would probably be one to argue that say, Well, I don't really want it to take that long. If it goes up right now and it does the same move, truncates it, maybe that wave finishes higher, you know, it finishes up here earlier and that way it's above instead of below. But we're just going to use the method that we have. So this is a pivot, and then this is the SOS marker. And both of those are markers that we just found in the previous time frame. And thanks for you guys just like hanging out if you're still here. I know people have a lot of things to do on their Fridays. They're not really looking to like hear me slog on about stuff. The price isn't moving very much. It's at 460. And if you were expecting something huge and it's not happening, you're probably clocking out. But the goal here should be for us to identify and build out what we think is the most potential likelihood for a bottom. And I think we've done that in terms of this wave. Okay? That's been my primary goal here. So if you stuck with me, you're getting the answer to that question that we were asking earlier, which is what is the biggest picture wave that we can do and how does it look? And there it is. Okay. Now you might say, well, there's another thing here, you know, are we going to then do this big pump and drop down? And look, rotation doesn't just go forever. If it did, it would just never end, right? You would have to like keep rotating forever and ever and ever and ever and ever, and it wouldn't make sense. I'm not advocating that, right? I don't think that's necessarily likely. But yeah, like sure. If you were to kind of look at this on the big picture and say, like, let's say it kept rotating, sure, this would come all the way back down. And all of that would just lead to a whole bunch of nonsense until eventually you drop off the face of the earth. Because your rotation would eventually end in this, but the opposite way. So, yeah, we could sit here and kind of talk about that possibility, but that's not really the way any kind of range analysis works. So it'd be a little bit silly or irresponsible for us to like sit here and pretend like that's very likely to happen. I don't think that's very likely to happen. So I'm not going to like sit here and chart it. Point is, this is where you potentially come up and hit the SOS. And if that can happen, then you should just take off. A lot of times, the last known trajectory tends to be one of the best trajectories. So we'll see what happens here. I'm guessing that this trajectory, this 79 degrees, is pretty close to this drop-in trajectory. 79. Oh, I like that on the arrow. Yeah, it's pretty close to that final trajectory. So a lot of times it ends up being pretty similar to the trajectory that you get as you go along, albeit that's a pretty huge debate point. And I don't really want to like get too much into that right now because even though that's true sometimes, it's not an all the time kind of thing. So I've done my best to try to identify where I think it's going to go. I wanted to do a P&F. I keep avoiding it. We may need to do that now. Now that we've done this setup. WTO is looking kind of so-so. It basically head faked again above 5. It just looks like a distribution to me, like a push-up and a secondary push-up. It just looks like straight-up cat ears. If there's anything good about it, it's this RSI build out that it broke back above that moving average. And so it would have to kind of hold there. I know it's a little weird because using RSI on the 1 hour doesn't really seem like the best way to trade a stock as opposed to just price action. But it looks to me like a cat ear, like a push up and then a 1, 2, 3, 4. If that 1, 2, 3, 4 can manage to hold what we see here as like a neckline, and then this creek jump, you could end up with a big, massive push here. If it doesn't, I don't really see any reason why this doesn't come all the way back down to like 40 cents. So it really is going to be dependent on this little pocket from like 47 up to 50. You can do some really basic stuff with that. Just chart it like a flag or whatever you want to do. A couple tops and see when it breaks out. If it breaks out, it's goodbye. Potentially rises pretty far. And if it doesn't, then I think it's pretty dead. And unfortunately, this is one of those trades that was already going to be really high risk. And we knew that going into it. And it just hasn't made the right moves in terms of like building momentum out. Every time it's had those momentum shifts, it just hasn't held. So there's still a huge amount of divergences on like RSI and MACD. Like there's all kinds of indications that this thing could just turn around and go flying. But it hasn't followed through with any of them. So you don't use those as leading indicators. If they're not working out, they're not working out. And they don't have to. I mean, that's the thing about any kind of indicator is like, it's just telling you what's happening with price. It's not necessarily going to be predictive of the future. Sometimes it's very predictive, and then sometimes it just flat out isn't, and that's a risk that you take with any stock when you're looking at something like bullish or bearish divergences. It's always like grain of salt, this may work out, it may not. So right now I'm kind of watching this and seeing if we can bounce here and then continue upward and find support. But I've seen a lot of questionable things with gaps and stuff on it. And it reminds me a little bit of AMC in that regard with the way it kind of broke down at the bottom in this early reaction. I'm just not so sure it's going to continue. It looks like could be a shallow S-curve, could be a full-on just dropping S-curve here, way low to 40 cents or something, So it's at that point right now where it's got to make that decision. So I'm kind of feeling bearish about it, to be honest. Today should have been a big pivot day. It was kind of the last one that I had. It was the last intersection up here was Friday. So if it doesn't pivot right now, I'm not a huge fan of it. I'm just going to be honest. It doesn't mean it can't do something crazy like drop down to 40 cents and then rip, and all of a sudden it's going. I'm not saying it can't do that. We don't know with stocks like this what ultimately like the goal is. You're just guessing. The floor is the limit. 0 is the limit. I did do research on WTO. I looked into it, and here's what I can tell you. They did an offering back on the 16th, the 13th through the 16th. The offering started with this big drop, and then by the time it was done on the 16th, it came back to that drop. I noted that the 13th and the 16th, those kind of early values right here are right around 66 cents. The offering was at 65 cents. They definitely did an offering at 65 cents. And then notice when this pumped up, it goes all the way back up to like 65 cents and then drops. So it's very possible that whoever got the offering, for whatever reason, they could have just sold it right here, like brought it back up to sell it down. There may be a proclivity then to return back to 65 cents, a desire to go back to that level. But beyond that, it's kind of hard to say. They had the reverse split, then they had the offering like right after that. They posted a few things. So there's some questions I have about this company. It's a really bizarre company. So U-Time supposedly makes cell phones and electronics and junk, which is fine. They're an emerging economies kind of business, meaning that they aim for low cost production so they can sell at low prices to emerging economies. Those businesses are usually pretty decent long run if they can gain a foothold in those countries. They can become very popular outside the U.S. So you may not hear about them in the U.S., but they're like really popular in like Brazil or, somewhere in India and like this kind of stuff. And you're like, well, they're not popular here, but they make really good money elsewhere. And that's what they're targeting. And it is based in China. One thing that was really bothersome about it, if I had to pick one thing, was they're investing in like medical stuff. Like I found a bunch of different articles about their investment in like monkeypox stuff, like sponsoring like a lab or something. And I'm wondering if part of the reason why they're losing momentum is because of that, because it's such a weird shift. It doesn't really make sense. It's a diversification that doesn't necessarily add up for their company. And I read that and I was like, wait, what? Like, what? Why? That's a weird thing to get into. Maybe they care enough. Maybe they care about it, and they think that it's kind of like the Moderna or whatever kind of motif. We're like, well, if we're the first to get a vaccine, then we'll be rich or something. So they're kind of, seems like a gamble to me. And the company has lost money a couple quarters in a row. So it's on the whole over the last year not been as performing as well. Then they do a reverse split. Then they do an offering, and then they do some monkeypox lab buyout. It just feels like a company that's on the verge of craziness. Like it feels like a desperate company to me. That's what it sounds like to me. Weirdly, they posted like a press release. I found it to be very weird. That was basically like, we don't know why our stock's so volatile right now. And I'm like, well, you're saying you don't know, but you're doing all this crazy stuff to your stock. Like, you're doing crazy stuff. Like, why would you not expect it to go a little crazy? So I think the market has just really responded with great amounts of uncertainty in the last couple months to the decisions being made, and not knowing like what exactly is this becoming, right? Part of me wonders, if they're going to try to do something to prop their own stock up beyond the reverse split. But they were almost delisted. They got an 180-day extension, and they, fixed their problem. So I don't get too deep into the fundamentals of a company that I'm not necessarily going to invest in long term. This is not a long-term investment. It was just a highly technical trade, and I was looking at the setup saying, well, there's definitely a potential here for a breakout move. When it didn't happen, I'm just kind of like, all right, well, it didn't happen. It's starting to look a lot more like what happened up here, right, with the big push up and then the cat ears, big push up and then the cat ears. And I don't want to sit through necessarily months and months of this thing if it decides to just take a nosedive, right, towards zero or something, and I'm not saying it's going to happen. Like I said, RSI is kind of weirdly divergent. MACD is weirdly divergent. There's a lot of things here that are kind of positive. And it looks like we're going to cross up on AMC and GME. So we're going to take a look at that in a minute. But the build out here is just very odd, and I'm wondering if we misread this as a bottom and really it's like an early reaction before the bottom, whereas it's like kind of lessening, like kind of lightening up. It's hard to argue that because the highest time frames, and I know I'll get back to AMC and GME in just a minute. It's hard to argue that because the highest time frames on WTO haven't made any signs of life. So it'd be really weird to kind of say like, well, it's not done bottoming, and like yet it clearly looks bottomed on like the highest of time frames. But on the lower time frames, it doesn't really give me the vibe that it has to be a bottom. Like, it looks like it could still nosedive. You know what I mean? And if it does, guys, the wave is really low, So this is like we were kind of playing to see that bounce, and we never saw that bounce. And now we're looking at it, and it's like, yeah, I mean, if it does continue to wave, you could be talking about a drop significantly low. I mean, we're talking about 10 cents or something ridiculous. So I don't want there to be any kind of confusion about this from that standpoint. This is not your kind of bill. You don't like that possibility. Like, you don't feel good about it. You got to do what's right for you, For me, if it drops again here, goes below the floor again, I'm just probably going to be done. And it's not a huge loss. It's a little loss. But I'm probably just going to be done. Maybe I'll re-enter if it comes back above 50 cents. But I'm not going to trade based on the possibility that it just rockets one day. Like, at this point, I would just wait, and average down. So that's the way I feel about it. It's with this being like a second ear, like a 1-2 here, it's just kind of the moment of truth locally. Locally, this would be like where I would look for that. Either it's going to hold and advance, or it's going to nosedive. More than likely. I don't think it's going to just coast sideways at this point. But that's an opinion. Take it with a grain of salt. It looks like IWM pushed up and went to the top again. So it hit 222 again. That's kind of important because we sort of guessed that this could end up being like a head and shoulder, and it's starting to look that way. So before you get too excited, just keep in mind like this is sort of the wave back up from that drop that was made. There's like a, maybe you call it a diamond because it looks like it widens a little and then narrows. That rode this creek, and I think that this is the reaction back to that, and it's intersecting the previous ceiling here. So breathe through it. Don't just assume that a little bit of life is going to give you everything that you need. Yeah, it came high, so it's definitely pushed back up. So either that's a sign of serious strength on the part of buyers, like they don't want to stay down here, in which case maybe this is going to go ahead and exit early. We're just going to watch the creeks. We talked about that early on in the stream, the potential that this jumps early would need to come above 471 and then hold at 460s. But I don't really want to see that unless it's ready to go, because reasons. I really don't want to see it push up high here and then drop back down. Maybe, let's say, how high did it go? Went up to 465, didn't it? Yeah. Well, so the reason my alert went off is because it pushed above, and this is about right. This is about right for that wave cross. It's interesting how RSI changes the way you view the move. Like this is an M cross, even though it looks ridiculous on price movement. It still looks a whole lot, heck of a lot like what happened over here. So my judgment's reserved. It's just doing it to the next level up. And remember, that's a gap fill. So a lot of times the top of a gap can become like a resistance. The gap specifically was at 2346. Actually, it closed really high. I thought it closed on the low end of that candle, but it did not close on the high end of that candle. So 2310 was just that key level. So it did not fill the gap. I don't want to argue about gap fills. People always argue with me about it. Oh, hit the candle. Yeah, on this time frame. Go down. If you go down lower, it's not going to hit the candles. You know what I mean? I just look at it as closing value. It's that simple. So I think it reached the top. Can't, wick to it, but yeah, didn't actually close it. So there's a creek jump that happened right here, really abruptly. Maybe we need to come back and retest it at 2244. We'll see what happens if that occurs. I was pretty happy with the way the volume worked out though on GME. Like this high volume build out, pretty solid. It kind of drops off as it keeps going up, and I actually like that. It's better than like a really high volume top where it ramps into the top and then reverses. So it looks a little healthier than like a normal, what you call like a UT kind of move, where it's usually just shorts covering. A little bit healthier than that. And then we've talked about this creek. On this screen, it's white right here, right above us at 2330. On the other screen, it looks right at 2310, but it's because that was where it was previously. I didn't raise it because of this previous push, and on this one I did. I raised it up. Basically, this little zone is where the actual creek jump is. Y'all, GME, as much as it pushes and has big moves, it can have 10%, 15% moves underneath that level for all I care. If it doesn't jump above, it doesn't mean diddly squat. So I know that it's easy to kind of look at stuff and say like, well, it's going, but I don't think so. You know, you really need to see it push above and then find support on top of that creek. And I would say ideally that happens around the same time, maybe that you do that 2310. It's kind of like AMC, which is built out potentially like a bottoming here, maybe right before it takes off. You've got a pretty big window, and I'm not going to just like unravel that just because, you know, it goes up high. I mean, I don't like that it came up above 464. I already said that earlier in the day. It could be a sign of impending distribution, especially if there's not a lot attached to it and it can't make that push. It's usually because you're trying to get sellers on board to drive the price back down. There's probably going to be some kind of a sell wall here anyways on a Friday, right near 450. Unless the intention is to build out here and like really hold above 462, 463 area, I don't really want to do it. You know, we've talked about 465. That's kind of been my main floor, but I just don't want to do it. Like, I don't want to just like sit here and head fake into the top. That's not my ideal situation. If it holds above, yeah, potentially it's an early advancement, but certain things have to happen to continue that. So again, it would have to kind of push up and then retreat back down and find support. It looks like at 450s, and that's already kind of a dicey situation. So anyways, you guys know me, Mr. Skeptical. So yeah, with IWM kind of reaching its top here, I hate that this looks like it's going to just nosedive still, because you keep making gaps. There's like another 1, 2 right there. It looks to me like it really doesn't look like it's going to break out. But I will say this, there's been a couple times on IWM where that's taken a lot longer than expected, where they've done like a secondary move like here, and this doesn't actually go anywhere right away. It just takes a really long time. So I've kind of had this, I drew this out really fast, but it's more often than not, there's a lot of like garbage kind of in the midst of this to make you feel uncertain. So I wouldn't be surprised if something like that happened right now. I bet it jumped that other creek too. Yeah, I mean, GME's up 1%. It's sitting underneath a macro, super macro, like huge, big picture support and resistance level at 2310. I would not celebrate anything unless it got above that and the creek. So yeah, this seems pretty accurate here. This is the jump. So we'll see. Like I said, it wouldn't surprise me if this does some kind of whatever up top before making a decision. Usually there's a lot of space, and they build that into the move. You see all this room right here to like sort of test and retest the top before you'd have to do anything with these. You wouldn't have to interact with these creeks is what I'm trying to say. You wouldn't have to jump them right away. You could do a number of tests and retests on supports and stuff. So, man, I really didn't want this to go down here. Well, this is measured out to being way over here, though. I don't know. No, I wanted it to go down. I wanted it to go down earlier is what I meant to say. I didn't want it to go down late, but it looks like that might be the case. So, we'll see. I'm just going to wait it out. Anyways, my expectation would be this still. So chop, 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 drop, maybe Monday. And so I think today is still pretty flat. Yeah, you could see how that could play into the same thing here with the chopping and then a drop Monday, or even drop end of day today. I don't know. I don't want to be like a negative person about things, but I'm just trying to read the chart as it is. So right now it's just a big wick to the top that dropped through, punched through the ceiling and then dropped. But that's what you'd expect. It would not make any sense to hit this and not have a reaction on GME or AMC. Same levels. It's weird to me that they're treating... Let me check something really fast. What happened back here on... This was September 11th? September 11th. 490. So AMC was at 490 on September 11th. GME was at 23. So they shifted it down. They shifted that supply down. Oh, and AMC, it's lower now. I walked it down quite a bit. I really do wonder if GME is going to make a giant flush after all. It's kind of strange at this point to do it because I can't imagine why it would go below 2070. But I probably said the same thing back here, that I didn't think it would go back below 2250. I probably said that, didn't I? Because you had that creek support, but it didn't end up doing that. It ended up going in like that because partly because of the obviously the earnings report, but it did it in like extended hours. It didn't do it while everyone else was trading. It just dumped really far. I wonder if they could do something similar, if they will do it. Where's that going? Is that going to the same point? Not really. I'm looking at the rise. So whenever there's something that to me looks like an iteration is like a copy within itself kind of thing, where you're seeing like the same thing play out on a smaller time frame. That always prompts me to kind of look up and see if I can identify maybe a consistency. But in this case, I'm not really seeing more than one iteration. Man, we're so far away from all that other stuff that we built out earlier. It's really annoying. This looks like October 24th or 25th. It's actually 28th, Monday. What was that date that we got? The 22nd? That was a Tuesday. Let's see if that works any better. It's not that off. I mean, they don't have to be the same. I need to check something real quick. Sure, if you ignore every other spot on that line, it works. Except for those 2 points. It's the only way that works, so I don't know why I would do that. That doesn't look right to me. It just looks wrong. It's just a better mark. I hate how sometimes it's like perfect and then sometimes it's just off enough that it just doesn't quite work. It's really frustrating. It's like nothing's quite right. Everything's like a little bit off no matter what you pick. Well, in any case, it's the same kind of concept. There's like a window here, it seems. My problem with this whole thing is I've been operating on certain assumptions that are not necessarily the best thing to operate off of. There's other trajectories here too. That's the weird thing. It's like I'm using like a less steep one. I'm using one that's kind of like not very steep. And I'm trying to do something similar to what I did here. But there's another one that's actually quite steep, and that's this guy. It's the splitting of this kind of splitting of the ears. And that's the one that I usually use to try to identify. I bet that just happened. See, they're not going together. They're just parallel. 73, 73. Yep. So they're just parallel moves. Pump, pump. It's weird. They're not intersecting anything. Brutal. I think what I'm going to do here is work on principle of what's been most useful versus what has not. This one, incredibly useful, but when it failed, it never recaptured it. And it ended up being a really good pivot, but then that's that. And I'm still thinking this is useful, so I'm going to keep it on the chart as a pivot. But things that aren't really useful anymore, I don't really want to keep. This one, I'm debating heavily whether I should keep it. I'm going to try to focus on cleaning this up really fast, and then that way we can have a good chart. So these zones were just potential lows based on a number of things. There's nothing wrong with them. They're just there. I don't really need this one anymore. I don't really need... Well, I kind of do need this one because it actually ended up building out quite nicely. See that? This is where we broke down. This is the creek that we held. This was really important because it actually goes way back to like over here. I think this was the main, we call it a creek, but it's kind of flexible. This is kind of like the main creek that we were trying to get over, and we were driving the price low, and we finally pushed it when we came back up to 23.10. We jumped the major downward creek, and you may not think that that happened, but it definitely happened right here. So there's two peaks on the first move up right around May 13th and another around the 6th and 7th. That's when all that Roaring Kitty stuff happened. And once that happened, the rest of this has been just kind of reapproaching that and not jumping it. And it didn't finally jump until it hit a low around 1870, and then it jumped over. It's a weird looking rainbow jump. It doesn't actually check the creek. It just kind of bounces over it. Really strange, right? And I wondered, part of me wondered anyways, if the creek has really curved outward since then. And I think it has. So I'm kind of using a little bit of, just to say creativity, to just kind of imagine where that visually has gone. And I think based on everything we were looking at, I think that's what's going on right now. I think these little jumps have been, these parallel jumps have been trying to get back above what has become kind of a flexible creek. If you look at just as a straight line, it works really well on AMC to do that oftentimes. But GME is a little different. And GME has these bizarre kind of flattening creeks. They did the same thing back here. Remember this? And that was like obviously like, oh, it's flattening. You know, it's like it's not a straight line. It just isn't. It's almost parabolic in nature. So I think it's appropriate for us to do that for GME here, and give it that flexibility and not worry too much about. So I'm going to use this chart a little bit to like help inform some of these levels, but I want to make kind of a newer chart here. What level is that? 40, 18. I don't need this one. Close enough. And then we think it could potentially be up to 43. Don't think that's gone anywhere. That has based more on like a level, not a. I can't bring myself to get rid of these yellow guys. I know. But there's just something about them. I need to keep them right now. Yeah, so you can see the visual connection here in the advancement, maybe of where these are trying to go versus how far they're getting. This is a very important trend right here too. We'll keep that one. So there's still a wedge. I mentioned this before, and I didn't really like focus too much on it, but there's definitely like a wedging action here in this movement. It's possible. I think this was an assumption that it would come back down. It could. You never know. Could still drop low and come back up. If it double tops on it, that's what I might expect to come back down. It doesn't have to. It's possible it holds and just continues out. This is absolutely like a wedging action, and it makes sense because on the big picture, this is kind of the way I guess I would visualize it. On the big picture, this is what happened on the macro as well. You kind of got this double top and then a long, boring wedge. So this is the cat ear formation then here. So this is like the wave down and then back up. So if I'm looking at this again as a waveform, I could probably simplify it into this motion right here. And that's as far as I need to take it for now. So we're going to lighten these up a lot because I don't want all this clutter. Can't see it. And then this is still like one of the most important levels, so I'm going to keep that one highlighted. Keep 2470. Probably need to keep that just because it's a gap. I don't need to keep this. These are just trajectories. I was just kind of observing these and just seeing if they were parallel, and they are. So yeah, basically, oopsie, I don't want to do that. basically this is your wave here. So I have to wonder if this is really the goal, to come back to here, to come all the way back down to 2150, which is a high liquid spot, right around 22. So you could drop slightly below it. Well, 2580 is a breakout, so I don't think it's ready to go unless it jumps over 2350. This is a big creek down, so I don't know why. I mean, I just don't know where you're coming from with that. Feel free to explain it if you want. I'm just charting. I'm just charting stuff. Yep. So it looks to me like this wave is tried. I already did try here. Attempted to jump the creek, and then we saw that visually in the price action. And then this is another attempt to jump the same creek. You can see it. So this is the cat ear. 1, 2, 3, 4. You should have another push up. Maybe it already happened because this is 1 here. This could be 4. So if this doesn't jump over, it's probably going to head back down. All right, well, I'll just say it then. So Reese says that when it got past 2244, he thinks it's going to go to 2580. So that's his TA about it. I cannot agree with it because I don't think we've jumped over the most important levels, which are 2310, ultimately the creek, which is around 2350s, and then 2470s. I think those are extremely tough levels that we're going to need to really make sure are ready to go. So yeah, I could see this kind of delaying any kind of price action here up until the 14th of October, which is consistent with what we saw on AMC earlier, which had it coming out pretty far. I mean, it's basically the 11th is what we found was sort of the latest maybe move, the 9th through the 11th. But then if you look, that's a Friday, and then the Monday is the 14th. So sideways could last as long as then, you know. And then I'm looking at GME, and I'm kind of seeing the same thing. You can kind of visually see it as well. There's a very clear path to just kind of chop here and keep the market in suspense. I hate to say it for GME, but if that doesn't work out, it's going to be nasty. So if this ends up coming back down and doesn't break, this is where you would see like a spring, is basically what I'm trying to say. You would see it like dump here. And I don't know exactly what it looks like. This should be like 1, 2, and then it would come back and hook. It'd probably be sooner than that. Yeah, if this doesn't advance, it seems unbelievable, but if you go back and you look at the way this is set up, when it sets up with these downward trajectories, if it doesn't hold that trajectory, it comes back to it later, right? So like we talked about this when it wave crossed up. It's like you have all these trajectories lower, and it's hard to pick the right one. The best you can do is look at where the M cross was. But if it advances on weakness and it can't hold that advancement, it's going to come back down and try to find that low again. And that usually leads in this kind of a setup, you can see it's kind of leading back to like a really simple waveform analysis where you're just kind of jumping a creek and then coming back to check it. And it happens to be that in this case, it looks a lot, very clean. It looks a lot like a channel, right? So you have a similar motion here where it jumped over, but it never really checked it. And I don't think that that's a huge deal. Usually what I would look for is that check, but I didn't see it. So maybe that was this right here. This is really awkward positioning for it, but I guess it's possible. And then it never came back to the bottom. That could be right though. So this ends up going to the top. Yeah. So this ends up being like the 50% mark. That's pretty accurate. Yeah, that would suck if it went down there. It'd be like $13. But it never didn't check the lows, which isn't my concern right now. I'm just thinking out loud. Then the next one would be here. And somewhere in the middle. So I'm going to redo it. Since this didn't come down to the bottom, if this failed to advance here, man, it's hard to say where it stops because I don't know just yet. Yeah, I don't care if you necessarily like look at this and say, well, I ain't gonna happen, you know. Well, that's what we would have said the last 2 times it's happened, you know what I mean? It's happened repeatedly, so it's not really a big question mark in my book. And this is very similar to the creek that was made anyways at the top, so I think this is pretty accurate. So there's a really steep one right there, and then there's a little less steep one over here. And there's kind of in the middle one right there. Which one is it? I don't know. I think it's that one. That's what I'm going to pick out. Right. So this would imply that maybe it hits another high even before it's all said and done. I mean, it's possible it just crosses up, never comes back. It's not out of the realm of possibility here. But I'm thinking that that's like a hook, and then it breaches here. Maybe it goes pretty high, and then it drops. But you see how like this is a pretty nasty slide. And I'm not saying it goes all the way there, but that is October 4th. That's when we were thinking AMC comes down. So hopefully it crosses up. It doesn't make this a strong possibility. And if it doesn't, then I think it's a strong possibility. And before you cry foul, remember the numbers we talked about were like between 830 and 770. And I didn't remove that over here. The idea was you may not do that until later if you do a move first. So it's not that that doesn't get hit ever. It's more like it just doesn't get hit now. So 770. So this is like too low. Ugh. It doesn't have to hit the bottom. That's not a thing. But it's definitely in that pocket. 770 to 830. Yeah, that's not an accident. So if this doesn't cross up, this is basically just a classic M shape without the cross. I think one thing we could look at here is the potential that it doesn't go to low based on holding this creek. So there's definitely a possibility here that it holds and then advances. That would be like an LPS situation. Oddly though, to me this looks like it already jumped, so I'm not sure. Unless that's the middle, in which case 1, 2, and then back. and then it jumps, and it's actually the bigger portion's not even happened yet. In which case, this move should still be in the bank. So after you get some kind of pullback here, if it needs to pull back, you would then get a rocket up. That's pretty close to the target that we have. Up here is really close. Okay. Well, we'll see. I think if we can get the cross up here, probably going to see it potentially advance all the way up to 28. Because that is already a bottom. Like, it's already made that bottom once right here, back in this area on the 24th. So, like, in terms of a wave, that would be the reactive move potentially out of there. 1 and then 2. That should be where it goes. And yeah, looks pretty strong. May go even higher. Where did it hit that low? Hang on. No, it hit the low here on the 26th. Yeah. And that's about the same. So it would probably come all the way back up. It would be really fast. Well, this would be fun, wouldn't it? Well, let's hope this happens instead of the other alternative. It'd probably come up to 28, 30s pretty quick. And I would imagine there's probably some level over here that that's relating to. So we're going to go back just a little bit and look. See what we can see here. $25.80. What are you talking about? No, I wouldn't measure from 25.80. That's not the way I do it. I trust myself. I know what I'm doing. With those kind of measurements, I know what I'm looking for. There's a specific way that I measure it. So it has to do with the wave drop in. It's the distance, like you hit the top of the wave and then the distance you travel in. No matter what happens down here, when you're ready to leave, that distance should be the same distance you travel out. Sometimes it's lower, right? And then sometimes it's higher. And it depends on the end of the M sequence. The M sequence could be a higher M sequence like this, or it could be a lower M sequence like this. Okay, so I'm going to do it the way that I do it because I believe this works the best. So these are the markers that, the way I do it, okay? So I'm just trying to explain that to you so you understand. Like, that's the reason I measured from where I measured from, if you guys are wondering. It makes no difference. It has to do with where it takes off. And the chart can position it level or down or up. This is that reactive move from the drop in on the wave. So the wave itself, the bigger wave, ends up being like a here to here to here to here to, you know what I mean, and so on and so forth. This is why sometimes it presents itself like a hook. This is what just happened on AMC, by the way. We just had this big wave down, right? And then it reacts back up, and it presents itself like a hook. And there's a difference between, the great difference between these two, obviously, is one tends to advance, one tends to get stuck. Because then you're stuck here reacting down, which is what happened to us on AMC, versus this move where you've jumped the initial bottom and then you end up reacting back to this creek. But the wave itself always tends to measure the same. It doesn't have to be perfect, but it tends to measure the same. So that's what I'm doing right now in GME. And it's setting up lower because it came down lower, although this M cross is pretty high. So what I'm doing is I'm looking back here and seeing if I can find the drop level. I think I already got one of them. It looks like this is one. I already have it on the chart. It's 2870. And then another one would be, this one's kind of tricky. I think it's 2770. What a weird number. Maybe we'll just do the 68 since it's 28, 68, 27, 68. That's a bizarre number, but that's what it looks like. And then it looks like 2650. Those are your initial drops where they hooked from, basically. Where the supports were. This one's a little more fuzzy. I would have to look at it in more detail. And then 2560 is one of the bigger ones over here. So just to kind of give ourselves a ladder approach, let's see where that's aiming. Again, we don't have to be perfect. We're just trying to get the best idea we can of where it may be aiming for if it were to break out now. So this is the ladder. This is the breakdown. Really, we could just measure the breakdown too, and that way we can get the two highest potential points. I hate to say it's that gap, but it may be like slightly above it, like right at 2355. Down to this floor. So that's one. And see that creek jump, it ended here. So it crossed up. So if it holds, assuming it holds, that's a really clean move to 2650. So conservatively, that's probably the better move. And then this is really close to the second one. So there's two main moves here. I think 2650 and 2770. Potential. Those are the bigger targets that I would have for a wave out here, if it can do it. That's just the first, the first of possible many legs, but you'd have to, then you have to look back and take into consideration this wave through it. So this was like a 50% drop here through this kind of middle portion of 2360. And so you can see the rise on that. It may not matter too much to some. I find this to be really important usually though. And I'm wondering if I measured from the wrong one. That looks more accurate to me. So I think we're going to go with that one. And that is very important because that's like another sort of center mark of another wave right here. Down, and then this would be the low M cross. So you'd have another potential move, but you would need to have a pullback. The pullback doesn't have to have equal parts to anything. But I gotta say, I do imagine that in this case, that pullback could be quite steep because, yeah, I mean, potentially, even if you came up to 28 something, you've jumped over like a huge creek here. Now, GME doesn't always do the best job of like pulling back every time, but if in terms of just waves, like it's as simple as it can get. Like you would expect to come back to 23.10 again, basically, and then break out, and then this is where you maybe get like a huge wave up. That works. That's actually pretty close to the higher targets at 37 that we have. It's not like it has to be a perfect inverted head and shoulder, and sometimes these suckers compress so much that it makes you wonder, like, well, you know, does it just keep doing that like forever and ever? We've talked about this before. This is like S-curve mentality where things get stored up. It's certainly possible that it's stored up and it builds out more mechanically, but it's it's not like it has to do these pullbacks perfectly either. We've seen plenty of times where like this quote unquote head and shoulder looking thing might happen and it doesn't really ever go back that far. And then you're like, well, then does the measurement change? Well, sure it does, you know. We would have to wait until the breakout to really examine what happened with this creek. Did it kind of turn up a bit? This push up could greatly affect how far you need to come back down. Because like if you push up here, you're raising the creek up as you push resistance. And then once it jumps, if it doesn't check it, that's where you'd come back to. So if there's like a big jump here, this is just an example. We don't know this is definitely going to happen. But if you were to push up, let's say you push up to 24 and then it came all the way back down to 23, 22. Well, then if it jumps, I wouldn't put the creek really low here on the pullback. I wouldn't put it down here. I'd put it like right here. Does that make sense? You guys are like, I don't know, you're saying here a lot. You're not second in numbers. Well, the previous top being at like near 25, if you push up the second top to 24, it creates a steeper angle or a less steep angle than what it currently is, which is currently just abiding by its general downtrend. So the downtrend breaks, you get a new high here that pushes and raises the creek. So then when you come back, you don't actually have to go all the way back down to that trend that broke. That's not how it works. You don't have to do that. It would be like a retracement that's a little more low key, but I can't yeah, I mean I can't be 100% positive about that anyways. So right now it looks like we're pretty close to right. I think that it's just more about opinion, I suppose. It'd be something like that. You wouldn't necessarily come all the way back to this bottom. A lot of possibilities here, but if that were to happen, yeah, you could pretty much get a straight shot to 37.50, which is a key level. We've talked about that before because we talked about going between 33 and 43 and 37 being kind of in the middle of that that range. It works. So yeah, sort of a center mark. It's a weird pattern. Almost too much of a bowl shape. Let's do real quick. Let's do a fib breakout target for this wedge. So we're going to go from the highest point in the wedge to the lowest point in the wedge. And then we're going to take that. We're going to just use a 62% value. So assuming it broke out at 23.10, which is what we would be saying, you would have a potential target of 33.71. You can't make this crap up. I mean, it's usually that precise. But that's the nature of the market. It's always setting up things like this. And then the 70% goes up to 37. I mean, you can see the extension visually here. It's like basically perfect. So certainly there's a possibility that you get above 33, but that's the target for that. And then if we went back and looked at the larger one, it's probably huge by comparison. I don't feel like you should include this because it didn't actually start wedging right here, but if you didn't want to include it because you think it's like this kind of flattening wedge type shape, we can do that measurement as well. You go to 23, and that breakout target is 42, 41 to 42, which is, again, that higher region. So thus far, those are highly consistent variables. One target's up here, and the other's right here. And then we've got a third target right in the center. It doesn't really make any difference. It doesn't really make any difference if this drops down again, except that you actually have a greater distance traveled because of the nature of this being a lower low. The idea was that you're dropping somewhere between the low here from basically May 24th and the low here from August 5th. So it's somewhere between 1880 and 1770. And that particular range kind of gives you a sense of, all right, sure, you know, that would be like a bottom. You break out, whatever. That doesn't drastically change the price targets because your target breakout zone is still roughly the same area, and it actually would be slightly lower. So it's like, it may seem like those targets would be drastically different, but they're not. Just for example, like you would go from here to the new low, but you would probably break out lower on this trend because you're coming at it later on. So instead of breaking out at 23.10, you might be breaking out at 22.14. Well, okay, that still gives you like the exact same value. So it's a little odd. It's almost like in this case, it makes no difference. It almost makes no difference if it breaks out now versus going low. The targets are essentially the same. What might make a difference if you were looking at that is the buy-in, because potentially then you could have a lower low. If the target's the same, you are moving farther. So this is a 91% move if it goes for a spring, whereas if it does not go for a spring, that the best buy-in you could have gotten was probably back here at like 1950. You know, sorry, back to 33. It's only a 73% move. So that's kind of the only major difference is like the percentage you move. But the targets themselves are the same, which is really fascinating to me. It's like I could not mathematically like force that to happen. It kind of just has to be that way. You know, almost systematically. So anyways, I find that to be a decently convincing argument that you could have a push up to the near 28 mark and then drop back down, find support, and then push up again to, and maybe that does happen on the 11th, guys, because that looks about midway. Boy, AMC people would be so angry if AMC didn't go with GME at first. It would be ugly. It'd be hard for me to see that happen unless AMC comes up and then drops down here like this on the 11th. That would be a little more appropriate. And then it jumps the creek as GME is starting its major advancement to the top. But I don't know. That we get kind of lost in the details after that. So there's not really much point in going that far in the future right now. You'd have to look at the reactive move from that, whether you think it's going to break or not break. It's a similar question that AMC has to answer. But I guess it makes sense. They would both be at the SOS mark around October 21st. Yeah, it's the same wave. Down and back up. Down and back up. It really is odd how similar they are sometimes. So the only thing that kind of bugs me about this is, yeah, so like October 22nd, I didn't make this up. It just kind of happened, which is good. That's always positive. The only thing that kind of bugs me about this is, I guess, not knowing whether you're going to go for that spring or not within the next week. That's a debatable question. But then also, GME doesn't look quite high enough. So it came up, if it comes up here and it only hits 37, it's not exactly like an SOS. Whereas AMC is definitely closer to the top. They're both like slightly underneath their June 6th tops though. That's pretty darn consistent. They're both like slightly underneath that June 6th top. Well, I'm pretty convinced that's right. We spent like an hour and a half this morning talking about this waveform on AMC and making sure we measured it right and didn't include our bias in it and tried our best to make sure it has a macro wave. If it's going to do this, this is what you need to see. You know, we could keep it pretty simple with the concept of like up, down, up kind of thing. If you want to just do that, that's fine. We could just look at trajectories and just say up and then maybe it'll go low. You know, I've got a lot of different possibilities here, but the big picture is like kind of in between these, right? And it's going to be pretty similar no matter what happens. You would expect there to be a positive kind of accumulative range no matter what happens, and then you would expect there to be a breakout and have to reform back underneath 5, and this is probably where you're going to go back and test maybe the lower creek, but the rest of this is kind of just debate about how it gets there. Like everything else I drew on AMC was really a debate about whether it goes low or not low. And you could just kind of chalk that up to LPS or spring possible. And I think that for me, that goes without saying, but for some people, they're going to look at this and say, well, you think it's going to come higher. I'm like, meh. I really just think that it could go back down to the bottom, but it's not really that important. What matters is the creek jump happens. So you're probably going to get some kind of a double top here, and then you're going to come back down. And then after that, you'll see some kind of a rise, and it can happen a number of ways, but this is a rough estimation of that trajectory as it builds out. And I think from that point forward, it's straightforward. It is very straightforward. It's simple. Should come back up to meet that top again around 570. What bothers me about both of these situations is that neither of them really look like they're going to break out. They both look like they're lower. They're in an SOS range. Like specifically, this one is, it's got to be like above 34, maybe 33 here. So it's got to be in this little pocket. And then AMC's got to be above that 550. It's not like they're in a bad position. It's just really late. And it does make me wonder if, I don't know, we delay this out till November still, which is, you say whatever you want to say, I guess. Kind of stinks. Man, it looks right though. It's just missing. It's missing that backup buy-in. I feel like it needs to do like a big. It maybe not. I don't know. AMC's weird. Sometimes that happens in like a millisecond. You know, it's like you think it's gonna be really slow, and then you get to the SOS and it's like super fast, and then other times it is really slow. You know, it's just a very weird stock. There doesn't seem to be any real rhyme or reason. Sometimes we just kind of do it. This gives you a lot cleaner shot all the way up to 10 though, which is nice. Some people are going to be like, well, that's halfway to 20, Booksy. Yeah, but not really, because you started at 5, so it's really like halfway to 15. Oh, yeah. I'm just saying. Yeah, no, it's not. No, I mean, it kind of is. Just 15 or so. It looks like it might be aiming for this gap zone. By spending so much time down here, we're building up more and more cause. Keeps growing. So this is a good chart. I like this one. It's pretty nice. Maybe too many primary colors, but whatever. I like this chart. So we're going to look at this as like the wave total. I'm just going to call it that because I understand what I'm saying by that. I'm going to do a PNF finally on this again. And I'm going to refer back to the other ones to help make sure that the settings are right, because it does weird stuff to your chart. And we've done a point and figure on this already, but I'm going to do it again. and see if it's changed at all. Oof. Gosh, it looks so weird. It just looks so weird. So this is an hourly chart. Man, I can't even get this thing to like frame correctly here. It's doing weird stuff. Kind of changes the way you see the chart though, which I like. Ooh. All right, so what I want to do, I'm going to go back. I'm going to spend just a minute to look and make sure I have these. So we're going to go back and find the original P&F charts. I don't know where I put them, so it's take me a minute. But what I want to do is make sure I do it again with the same settings, because we don't want to misread it by getting a completely different count. All right, that was pretty fast. So the first one we did was 15 minute. We specifically picked a smaller time frame because some of the larger time frames weren't working very well. And where's the other one? Because I thought I did like 3. There's another 15. There's another 15. So the 15, we got a 1310 value, and we got a 1616 value. So these were based on, this is the chart. These were based on these particular settings here. So I'm going to do the same settings, and we're going to compare and see what's happened. So let's go to 15 minute. It's important because the box size can determine how many X's and O's you have, which determines a lot of things. And you don't want to get the wrong box size. It doesn't look like very much was added staring at it from here, but we got to make sure the box size is right. So then what we're going to do is go to chart settings. And we're going to go to the, here we go. So the first one we did was a box size of 0.05, which is 5 cents. And then we did the reversal amount of 3. And I think that's the only thing that we changed. I don't think we did any kind of adjustment method that was weird. So we had a congestion reversal is what we called it, and we did the count for that. So we're going to do the same thing. We had to do that because it didn't really make sense to do it any other way when we first did it. So the top was here at like 568. So this was one of the highs. And then the bottom, this will go a lot faster this time since we've already done it before, hopefully. We liked 458 to 463. This is starting to look a little wonky though. This looks more like 462. Oh, I think I chose right beneath it. I did this. So it looks like we're dancing on that right now, doesn't it? That doesn't make you feel good. Gosh. Hey, you wanted a spring. That's definitely what it looks like, isn't it? I'm not a madman. It's definitely the same kind of thing we were looking for, so it's just scary. So this is basically, I mean, 458 to 563 is the same level we picked out last time, so I'm going to keep it the same. What was it, 458 to 463? And then this one's actually 568 to 573. Why is it a range, Booksy? Because these are boxes. They're not singular levels. So it's important to note, like, this is a range, this little X, this is a range. You really can't do it justice unless you include the range. So, and then we picked the middle at 513 to 518. And this is where we decided we would use the middle because we felt like that had the most hits. It's debatable. Maybe slightly below there. 511, 506. Looking at it now, I might even make that argument because on the previous chart, we didn't even have, you see it right here, we didn't have these three right here. We have a lot more rows now. We've got 1, 2, 3, 4, 5, 6, 7 more, which is quite a bit. So it may be worth it to readjust that, but it almost doesn't matter because either one would be fine as a middle. It's kind of in between the two, to be honest. We'll just leave it there. That's not that important. It's just a matter of, so really the middle would be like 513. We'll just say 513. We're not going to give it a range because it's shared by both boxes on either side. So remember, point and figure erases time. It may seem a little odd, but what you're doing is you're ignoring certain things. If it doesn't move more than what we picked out, which is that 5 cents, if it doesn't move more than 5 cents, you ignore it. So what ends up happening is that there's periods of time that are lost. You can see July to August, nothing happens. It's almost like very compressed, right? There is a lot of movement, but there's periods of like no movement at all. And so there's these large gaps in time because there wasn't a whole lot of movement. It was just chop. That's important to note because when you look at this, time is not going to be, you can't really use what we normally use, which is like arcs and junk, because it doesn't make any sense. There's no timing involved in this. And that's important. So this won't tell us anything about time. Now let's do the math. So we've got a kind of a formula that we can use. So we've got a 15-minute chart. We've got a box size of 0.05. That's 5 cents. We've got a reversal count of 3 boxes. That means if it doesn't move more than 15 cents, there's no box. That's basically what that entails. So that's why sometimes there's nothing there. Now I don't remember what to do. Hang on. Let me think about this. So I think the reason that we added extra columns was because, is it always +2? Maybe because we added the extra columns. You count the columns and you add, oh, I said +2 because we added the beginning and the ending column. And the ending column we don't know yet, but you would add 2. Let me double check that real quick. Because we're using a congestion reversal. If we were using like a triple bottom reversal, we wouldn't necessarily add the 2 columns because you don't count the columns in and out. That's why. So we're going to count the columns that are inside, but we're not going to count the columns that are outside. So I think it starts here. Can I just do this without having to... Oh, I guess so, because it should count the number of bars. So this was where we were before. We were at like, what's that, 70, 78. Oh yeah, because I added 2 more. We were right here. We were at 76. And I added 2. Whatever. Let's just count them. All right, so it's 84 bars plus 2. So we're going to do 84 plus 2. Oh gosh. And then we're going to take that number and we're going to say 86 times 5 cent times the box. It's a little odd. And we're going to get the value that we need. We're going to add that to what price? Why did we add it to 416 last time? I don't know. I don't remember. This is why you got to do something more than once, because you forget what the heck you're doing. So we're going to take 86 times 0.05, 4.3 times 3 equals 12.9. I wonder if that's the reason we use that number. Hang on. Let me try it with the old math and see what that came up with. The old math. Holy moly. I'm trying to remember why we picked 416, and I can't remember why we picked 416. That's what I was trying to get at a minute ago. For some reason we added it back to 416, and I just cannot for the life of me remember where that came from. Maybe it was something to do with the no, I can't find it again. So I added that to 416. I added that to 410. Yeah, it must have been something like that. But now I have to go back and look, so. I'm going to put 4.3 down here just so I don't forget it. That's 5.3. Booksy. Stop saying 5.3. I need to do the math on this one again real quick. It's just to make sure I'm doing this right, because I feel like I'm missing something. I can't remember why we did it that way. So we're going to do 78. Oh, gosh. Plus. Why am I doing plus 2? You know it's 80. Oh, man. Times 0.05 times, that's 4. Where did I get that number from? Where did I get 416 from? That doesn't even appear on it. Are you just adding it to the low? Oh, I bet you're adding it to the lowest value that appears on your chart. Ah, that's what it is. Okay. Oof. Oof. So you're adding that to 416. That's all right. That makes more sense. That would be sensible. You guys are like, this is some crazy stuff, man. It's really just a math equation to determine how many boxes you think you should move. Like, it's a rise over run kind of equation. It's just simple stuff. But we went through it all last time. I trust it. I walked through it with you guys, and it was pretty solid. So this is 1706. Why is it? Yeah. So in the time that we've spent with this build out, we've added $1 to the target. But we did this more than once, so we're going to do it more than once. That's pretty cool though. So basically you got a target of 1706, which is pretty neat. That's higher. Now the next one we did, and I'll take a screenshot of this because this is cool stuff. I don't want to have to do it again. The next one that we did was slightly different. We did one at 15, but we used a 0.125, which is a larger. It has to do with our congestion reversal bottom, because the narrative of it changes, and it's like it changes based on the box size you use, and it had to do with like the in P&F there's certain box sizes that are recommended for different sizes, and we basically just tried to go with the full range and then average it. So we're going to do the same thing again, because we don't want to be picking like just the high number. This is going to probably give us a lower number, and I think that's fair. So we're going to do the same thing again. We're going to pick a different, and then we'll be done. Pick the same thing again. We're going to pick a different box size, because they had different values for what was recommended. This does look like it added another couple rows here. So this one looks a lot more like a triple bottom, like 1, 2, 3 maybe. And then the only trends that exist in the, yeah, it was clearly like a head fake right there. The only trends that exist in P&F are 45-degree angle trends like that, which is a little weird, but it is what it is. So it's down 1 over 1, down 1 over 1, down 1 over 1. So this would have been a trend that broke and then dropped beneath. There's other weird rules that I don't want to get into, but there wasn't a whole lot of trends here to look at. So we used this one last time, and we did not have that breakout last time. So you can see that we existed here, and you can see that false jump that happened right after this 3 down. There was 3 up, and then it dropped. And that was September 9th. So good to keep that in mind. That September 9th was a head fake for sure, which probably, on the chart probably looks right anyways. So we're not going to worry too much about that. We're going to look at this, and yeah, we're going to see if it breaks out. We should see something similar. Where'd all the typing stuff go that I had? I didn't delete it, did I? Uh-oh. Whatever. All right. I don't know why I did that. If I deleted it, that was dumb. So, yeah, where did it go? Is it just disappeared because I changed the timing? So maybe the coordinates of it, they just vanished or something. Oh, whatever. All right. So, gosh, we had 540, 503, and 462. I wonder why we picked 540. It's kind of low. Oh, because I had the most. Yeah, 503. And then that's still the same. And kind of interesting too, because this goes from 503 up to like 511, 513. Remember when it hit like 511 or whatever? It's kind of interesting. And then the bottom we had was 462. It's the same value. This is why I liked 460, because the P&F, it didn't change. Like, no matter what we picked, it was always the same. It felt like that 462 was the most consistent bottom. Now you can see there's another one right here on this particular chart that also looks very appealing, and that's got the high of 435. So I think that that would be also simple and logical to understand. Keep that one. That might relate more back to here than any of the others do, which we already knew that. I just preferred 460, the 465 region. So you picked the wrong number, Booksy. Well, maybe. It does look like it built here though, doesn't it? And then dropped low. Not built here and then dropped. So maybe it's just a matter of how you want to look at the floor versus the spring, where spring should set up, etc. All right, so what we're going to do now is we're going to do the same thing. For whatever reason, it kind of busted up my chart. So I'm going to move this over. Hang on. And I don't know where the data went, but it's just gone. So we're going to do the same thing. We're going to work out a congestion reversal box of 0.125, and we're going to have a reversal of 3, which is the box size. And so then we're going to count it. We're going to add 2. And we're going to do the rest. So we're going to add 2 because we don't know how long it's going to take, but there's at minimum 1 and then 2, like an intro and then an outro, period. So it says 27. So we've added 3, which makes sense. 1, 2, 3. So that's correct. Just double checking it in my head. So this is 29. 29 times 0.125 times 3 equals, can't do that in my head. 29 is like a prime number. So it's 10.875. Might as well just keep the whole thing. Then we're going to do 10.875 plus 410, because that's still the low. Assuming that it doesn't make another low. We could. You never know. Plus 410. That's 1497.5. So we'll just say 1496. We're going to round up. And that would be your P&F for this particular setup, this particular time frame. So we got 2 values. They're not so dramatically different. They actually feel about right to me. It's the same as kind of last time. So, oops. I moved this thing over and then it ended up looking really weird. So this time we got a slightly lower target, and so I would say that yeah, those bode pretty well if we break back to the upside. Makes sense? You guys are like, nope. Well, if you missed it the first time, I mean, there's not much I can do for you. It kind of is what it is, you know. We'll keep these levels. We'll switch back to the regular chart pattern. And put it on a logarithmic here. Man, it certainly looks like it's trying to hold there, doesn't it? I wish it hadn't come so high, though. I wish it had just chilled out. Oh, whatever. It's jumping some creeks, so we'll see. This was the fake breakout right here. So this is where it attempted to jump the creek and it failed. And I think that we saw that with that moving average jump. Remember, like here, this is like that EMA cross. So yeah, it's good to look at it from a different point of view. I mean, the fact that it appeared there on the bars chart means that it was evidently enough time and space traveled, not time, but enough distance traveled that it showed up. It didn't have to show up. So that M cross definitely made an impact. That was longer term. Now we got two values. So one is 1706 and the other, I just forgot it, was I think 496 or 497, 1496 and 1706. So the two chart values, depending on how you count it, they may seem ridiculously off. The problem with this is that it's hard to know which time frame to use, which box count to use. So we're just going to do like a simple average of the two because I don't really see any harm in that. You could look at it like a range if you want, like between those two values. Maybe you could pick one out that you think is more accurate than the other, but 1706, 1496. Again, thus far, could still increase. Oh, it's not $40. Does that bother some people? Sorry, not sorry. Yeah, I don't care. I mean, I'm not here to like give the MOAS predictions, so this makes sense to me. It made sense last time too, but you're such a douche canoe, Booksy. Yeah, I know. Don't you want to be a people pleaser? You'll blow up your channel, man. Yep. This is kind of interesting to me because I'm looking back at this as like a 4-year cycle. And you remember this is like where we were in November of 2020. If you look at November 8th, 9th, we were pushing above here. I mean, it's crazy too to think about this. This was like elections. 2020, we're right here, you know. That next day. What if this is like a 4-year cycle that's just going to take you right back so you're the exact same spot you started 4 years ago? That'd be pretty wild, huh? This is kind of interesting too because I'm looking back. Every time they shift, I mean, there's always levels that it could be, you know, and I guess there's always that. But this is the high liquidity, isn't it? Wow. So going backwards in time, this was the high liquid portion. This is where the most trading happened. That's pretty interesting. Trying to like better frame it, but I think that's kind of amazing, to be honest. So my estimation is that they're probably heading for that. Let's just do the, let's do it more properly. Hang on. I always forget I can do this, and it's not that hard to do. I just don't do it all the time. Let's go from where they enter this range to like where they leave this range. So you see the same kind of hit on the way in and way out. Look at that. So let me ask you guys a question. So those of you, those few of you that are still here, you can clearly see this is the build out along the bottom in 2020. And you can clearly see that the P&F targets that we just got, 496 to 1706. I mean, you say whatever you want to say about it, the methodology, it's kind of strange, I get it, but that's very odd. It's these intro and exit points from 2020. So I find that to be extremely telling. Specifically that bracket, I mean, that's weird, isn't it? This right here, it's like right where it entered and then right where it exited. Like when it dropped in, it first found support here, and then when it exited, it found support here again, right at that $15 level. Which again, maybe that's just a common sense, like, well, it's 15, it's not a, it's a round number, you know. It goes like 15 up to 18. So then the liquid center itself is actually at 1634, I think. I'm trying my best to kind of eyeball it. Maybe 1632. It's kind of a weird number. Yeah, I mean, you're asking if you can continue from there. No, I mean, yeah, you could, but it's basically just you don't have enough steam based on only the cause built to get you any farther. Someone's going to sit there and tell me that I'm wrong because of squeezing and all this other stuff. I've been very adamant that I don't think it's going to go way up past the 20s into the 40s and 30s for a long time. That's nothing new if you've been following the channel. But the PNF is not there to either. It's not there because I just happens to support it. I did this later on. If it were way off and I was way off, then so be it. But my estimation was that it was going to go try to reach for those creeks that it hasn't gotten yet. And so I've been looking at it as this one is very likely lately right here. And so if we go back and I look at those highs on that creek, guys, this hasn't even like gotten close to breaking out yet. And I hate to say that because a lot of people seem to think that this is going to moonshot. And I know where they're coming from. Like I feel ya. Like I want the same things, but there's like massive jumps that need to be made here. This is a huge resistance area for AMC. Like it was in a 2.5 year downtrend and moved away from it. So us coming back up, it's like that region doesn't exactly look like anything but a supply and demand. And we already hit that here, and we've already tested that supply and demand already. So yeah, I mean, could it continue? Sure, but you're intersecting at this point like some pretty solid marks. Now 1632 is interesting because like locally, so this is kind of that liquid center, right? And then we're going to call this, I don't know what we want to call it. I guess we just call it the 2020. And weirdly, the 4-year cycle like ended right on, like that November 9th is like right there. It's like right where that gap up is. So like weirdly, it's a November 9th. It's like a perfect 4-year cycle if we come right back. It's very strange. So I want to just note that out. It's really simple. Like it's basically right on that that marker, and so I'm gonna just keep that as simple as I can possibly be, and just say, look, it is what it is. I'm gonna keep it as a range because I don't think it's fair. We got two different targets with the PNF, which is just a cause and effect kind of methodology. But it is very difficult for me to see this as coincidence when you also have evidence here that this is very close to where that gap down happened on the reverse split. There's clearly like a specific reason that this went down and has cycled now through back to elections. This was in August of 2023. This was not the halfway point by any means. It's not like halfway between one or the other. But August to August has been very important for this stock. Augusts have been a really important area in terms of these like cyclical movements. And the 2022 August was where we had APE. Part of me wonders if this is some kind of a macro rotation, you know, like here down to here, because we are seeing that this is the creek. It looks like it's coming back to that level. Like this is the wave down and then back up. Anyways, we can get into all kinds of weird stuff though when we talk about that, so I don't want to get too crazy with that right now. Let's just take a look though. So there's a decent probability that you can get to one of these targets. I gotta say though, there's no connection right now with where that is. This is on September 20th. So that ship has already sailed. There's another one here. I don't like that one very much. I'm trying to remember where it was, because I think there's another one that I find to be really important, but I can't remember. It may just be this secondary move here. Yeah, so we reaffirmed, these were kind of like a double up thrust kind of motions. We reaffirmed this trend. It may be a better trend to use since it has a lot more hits. So there is another one. There you see that push up away, and then when it comes back down, it checks it again. Finally, like here. So it's kind of a secondary creek that might be really important. We need to color it differently. Even slightly different, because it's not the same. So we're going to make sure that it stands apart. That one's a little different because it's more of a trend, right? It's like the more solid trend here. And if you were to go back and look at the trends only and then kind of ignore the idea of any kind of a steeper creek existing, that would probably end up being one of the best trends that you could find. And this one is frustrating because it appears all over the place. It seems really important. If that's the case, then this should jump that trend, right? It also kind of hits that wrap point when we did the reverse split. It's kind of right through the middle. So it's another one that's like, you know, this could be like really significant. unfortunately, if that was all that was trying to be tested, we wouldn't go farther than like 750 necessarily. We could be like a double up thrust into it or something. But I don't know if that's likely anyways. So anyways, we're going to keep that in the back of our heads. But I'm going to use this as a possibility that if we pushed up, maybe that's where it intersects. This is kind of farther out in December. There is no intersection specific to November though. And we don't even have, we have November 8th and then the 11th. And that's really close to the top. So, really close. Well, I don't want to say we can assume anything, but what happened last time was that there was a low portion on the 8th, and then on the 9th, it actually gapped up. This is a weekend, so it may be a low on the 8th. We've got earnings as well right there, right beside it. So we may have kind of like a gap up moment that weekend. So I'm going to go ahead and just move it to the 11th. It's far out there, but maybe a good intersection point. It kind of works. Because then this acts as like a break level right here at 1380. I feel like it's too high. I said that before. Dang. Where did this go in extended hours again? It went higher. It went up to 1330. Well, that's kind of where I'm thinking that support is. I hit the wrong button. It's broken. It's a little debatable. So I think there's a couple possibilities right here in the way of the P&F. You could satisfy that by doing some kind of extended price hours movement that doesn't actually let you trade it. For all we know, that it could be a gap up after hours to like 17 or something, and then it drops back down to like below 1380. That's kind of what happened here. Is it actually went pretty high, and then it came back below where that gap is. Any kind of support built would probably be built out along 11 or 12, 1150 to 12. So, I mean, these values. It just looks too much like they're aiming for that gap, the top of that gap, or the bottom of the gap here, and that value. So they don't actually intersect the red line. Oh, come on. They don't actually intersect the red line till December 5th. So there's a huge window here. I know. My stream's buckling apparently at the knees. So potential upside targets presently, assuming that nothing else dramatic happens. I think it adds another couple bars if it goes back down, by the way. So I think if it goes back down, it's going to add one more row, which could increase it just a smidge. This ship has sailed. I mean, if it goes up, right now to me it looks like it's going to intersect these three. It seems most likely. Mm-hmm. I'm guessing that all of these are going to look good for one reason or another. It's usually the way this goes. This one looks pretty strong. This first one. Mm-hmm. Pretty close. When we look back at previous times of, you know, movement on AMC, you can go back and you can look at the setups and determine maybe where those lines were pointing towards. Now we've done this before, and what's hard about it is that there's always kind of a few different ones that work pretty well, because this line has a million different points on it that you could derive other points from, and it's a challenging one for sure. I think knowing the general level area is close, but you're not necessarily going to nail it. We've done this so many times and you're like, well, that still looks right. That looks right. It's more about making sure. It's sort of like a way of back testing for me. I'm not thinking about it in terms of has to be one or the other. It's more just, does it make sense as a trajectory marker? Like, are we aiming towards it? If we're not aiming towards it, there's not really much point in using it, is there? I think this one's pretty strong. Let's try the lower one. Yeah, and this is where things get kind of tricky, because part of me always wonders in the market if there's multiple possibilities and different outcomes that are sort of the same but like slightly different. You may have a situation where sometimes like all of them are being used, you know. This is more closely associated, this other one's more closely associated with this lowest trend here, right? It doesn't meet the criteria, but it's definitely there. It's also probably more closely associated with this hook too. I think all three of these are probably solid in the end. They're going to be different trajectories regardless. They all look pretty decent. So that's going to make it really challenging to get it right. The average of them is interesting because the average is actually kind of the same as, yeah, it's really interesting. The average is sort of the same as well. Maybe we just use the average and just like leave it at that. You know, like, well, we don't know for sure, so what we're going to do is use what we feel is like the most maybe equitable. Just use kind of the center. like that one. I do. I don't know how to measure that though. It's so difficult. I would have measured it back here, you know, originally. So I thought that was the middle. I guess we look at this stuff, we have to just kind of take what we can and not worry too much about the rest. Maybe this is like a lagging portion of downward motion, you know, into the end. It kind of makes up the difference of the rest of the move. One thing that we should take note from, of course, is that when you leave, you hit the liquid center. And remember, I've been saying that for a long time, and I was like talking about how like you should take off at like 485 and all this junk. I still think that's probably the case. So maybe what we should do is measure from the first time it came in. It hits like 485s and 470s back here. Maybe that's a better way to make note of where the range actually began. And there is a little hook right here on May 15th. Even though I don't count that necessarily because of the drop in, it might be a good idea. Yeah, that's pretty darn close, isn't it? Well, I mean, it makes it look like it's about to end right this second, which I guess isn't impossible. It's possible. But you're also assuming that you got everything else right. I can't really tell with this wave, the way I have it on this chart. I could be right. Yeah, I think when I did the main creek thing, I didn't use that target right here. I used this because I remember thinking very specifically about this, and we did a analysis on it, and I was like, that should be the middle here. It's where that drop happens. That's a more accurate center mark for the range. Right there, you see that little hook, and then it drops and it comes back up. That's the best place, I think, to use. But, I mean, then you're having a debate with yourself about whether or not that middle is where the drop is, or is it between these 2 points, or blah, blah, blah. I'm not really sure. I don't know. That's what I'm trying to say. It's somewhere in there in the midst of that. So it would definitely look like it's coming up within the next week or so, regardless. Could be Monday, could be the next Monday. I mean, you can see how there's like a huge range here. I don't really know. What good are you, Booksy? It's easy if it's right where the cross is. Then it's basically just Monday. But if it's not right where that cross is, I don't really know how to best define it, you know? It's like not really sure what to use. I'd have to use some kind of measurement tool across this wave. That's not easy. I would probably put it a little farther out, like over here. So split the difference between the two. It's just as a sine wave goes, that's what I would do normally. It's like wave up and then wave down. And use some kind of like middle variant. That's tricky. I don't know. I'm probably guessing right. It's something like that. Point is that I guess I should do it all the way to the bottom. It could be a lot lower. It's really just starting to look like that low hit over here. It's pretty straightforward. Yeah. There you go. So maybe, again, just kind of another way to look at it is intersection of values and what makes the most sense. It really looks like going into early part of the year. And we saw this on some other stocks as well, that there'd be an early year rally potentially. And then come back in the summer, come back down for the summer. And then maybe go again. We'll see. So, slow moving. This might be a lot slower than expected if it takes that long. I got 17 and 18 calls for, or 16 and 17 calls for January. I got those a long time ago. That's kind of looking like what it might be. I kind of don't like that it's that close, but maybe. Here's what's kind of complex about stuff like this that I don't particularly love. So there's a midway point at 845, right? Roughly. And that falls in line with other things we've seen. That's not really unusual. But let's say you took off here and you went up to 845 and then you did a 50-50 wrap and you just went straight through. You might think that that breaks the trend here. And you're not wrong, like it kind of does, right? But let's say you got a huge rally into earnings and it ends up going all the way up the month of October into November, and it's basically like this just huge move up. Really awesome, really exciting. The question then becomes like, does it continue to advance, if you saw this further on? And I don't think the answer is yes necessarily, because we've talked about this before, but this is where you could have potentially like a much longer distribution cycle. And, there's not really any kind of like one size fits all for distribution. It's very possible this could be like part of a double top. And I think that's where you'd have to sort of just wait and see. And it's very possible this moves very fast and gets there a lot sooner. It's also possible that it doesn't move till like the last minute. So probably the most frustrating thing about the market and on the whole is that possibility of, outcome. I think right now we're looking at October 11th as the most likely place to see that push out, but it just depends on what happens. I mean, you could have this kind of bleed back down all the way into earnings, and then take off after that. It's a really obnoxious kind of setup because there's not been a jump yet. It's hard to know how fast it's going to go. You have a lot of trajectories that suggest it could go really fast. There's plenty here that suggests that you don't have to. You can take your sweet time. And you could definitely like bleed down into earnings, and elections and not move till then. And you're like, yeah, but what about all these trajectories and junk? It doesn't really matter. Like, if it takes longer, it just builds out more. You're going to have more on that P&F count. This could be a situation where you still get the same move later, but it's like really late, like last minute kind of stuff. And maybe it even adds a little bit to it to get you up to that gap. And the way it's controlled could totally determine that. And I hate that because it definitely ticks me off to think about it being this like long-winded wait until November. Maybe we have an early rally in October and it doesn't actually advance. Maybe it's just an SOS and then it has a backup, you know. And that's kind of, I want to say it's a fear, but it's definitely a possibility for an outcome here on the big picture. So using this PNF is really helpful, but it doesn't tell you anything about timing. It just doesn't. The rest of it is going to be, a lot of this is going to be based on like waveform, and how long you think it takes is going to be determined by a number of things. Man, I wish I could just snap my fingers and give the answer. But like, this is very possible because of the nature of this breakout. If it breaks out, there's really no telling how long it takes after that. You can have an SOS and then have a really boring long backup into November, you know. And if you're an operator, it may be part of the goal is to just really screw people over, you know, like, especially if this bleeds up and doesn't do the checks. I'm going to be very cautious myself. I think a lot of people would expect something like this again, and just, but it'd be easy if you're an operator to not do the same thing and just pump it up, get to the SOS, and then do a really long backup period into November. And when you zoom out, it's like, yep, you could see it happening right here for sure. And it's unusual, but it happens. That could be a really long period of time. What you're saying, Booksy, is, I'm not saying anything. You guys do whatever you want to do, you know. What I'm saying is that the nature of this is indiscriminate. It doesn't care what you want, doesn't care what I want. It doesn't appear to me to be ready to break based on what we looked at earlier. I know it stinks, but it does seem to me that there's a possibility that it's not going to actually break out on this push, because the targets don't come up past the top. They come like right to it. Based on the timing of the wave, we did that earlier today. Both of them are the same. GME and AMC both kind of come up to the top. But there's no real like evidence that they break it. Like, they don't have any more on the wave anyways. They don't really have any more gumption. Like, there's nothing forward. Now on the PNF they do. They certainly do. There's definitely evidence there, but you don't know what you don't know. And we have no idea if an operator would prefer to back up for a while again, back to 5, and do it all over again. You know, this kind of slow grind into earnings versus a run up into earnings. It's just no way to know. And SOS and backup are just normal things in the market. Like, they happen sometimes. Sometimes you get an SOS, there's no backup. The creek backup is that's like what happened here. It just popped up, went back down, checked the creek, and left. It was like all of this happened in like an hour. And then other times it hits the top and then it forms a really long backup period. And those are things that I think would be adequate. So, yeah. I think AMC needs to come down below 4 before advancing. Why is that? It's a real question. It's not rhetorical. Why specifically below 4? I know you've probably heard my reasoning as to why I don't want to go that low, but I'd love to know why you think we should go that low. In the past, I'd had targets around 380s and then a little higher. I see there's a potential bottom there at 4 from the previous range before the breakdown. So if that's kind of the cue in, like maybe this hit back here in January at like near 4,
that we need to tap that before we leave. That's like the real floor or something. I could see that argument that like this is the floor. My concern is I think it's way below where this range has built out. So my bigger concern is not so much the nature of it on the whole. I think on the whole it's kind of whatever, but rather the nature of it in the range. Like you can see this is basically like this low at 432 is like probably the second best floor we have aside from 460, but the range itself is up here. It's not down here, and it really bugs me thinking about that. I know there's initially like a drop to like 408, and I think in after hours this went down to like 415 or something ridiculous. Our dominant range of trading though has been up here. We just did the P&F for it a few minutes ago, and there's no denying it. It's all right here. So I guess my problem with the idea of 4 is it just feels like it would have to be like a terminal shakeout or something and immediately reverse, which is not necessarily a bad thing. It's just I don't see how the setup demands it right now. We did the breakdown earlier. There was nothing below. Like this is the wave down right here. I don't see anything below 434 right here in this particular cross down. And given that the stock is already oversold, this should be, in my opinion, right where that liquid really needs to be gathered. All I'm saying is I don't really see a point in a spring down here because it's not, I don't know how to describe it. Like this to me would make a lot more sense in terms of like a liquidity grab. This to me would make more sense if you're going to go ahead and break low and go down for that low grab here. But you know, we did get a big push up today that went higher than I'd like it to go. I'm not happy about that. So it's not impossible this ends up sliding down again. That's kind of a heads up possibility now because, you know, it came up pretty far. I think it came up to 465. Maybe it came too high. Right. So I don't know. The wave to me started on the 25th and then it would come down here. I don't see it proceed going lower just because unless you use the higher point, and I guess we could debate that. Maybe you could see it coming down to low 4s. We've already talked about this though. There's other people like YouTubers and stuff that have talked about low 4s. And all I could say really at the time was I just don't think it's the best idea. So yeah. Well, you said, you know, dive through from high liquidity to low liquidity. I agree, but low liquidity is already present. I mean, yeah, sub 4 has definitely the lowest trading. I think the reason that I'm not talking about sub 4 right now and I'm only talking about sub 460, the reason I've been kind of like hinting that that's where I want to see that happen and not lower, part of that is I don't really want to go below the 435 mark. And specifically, I think we picked out like 425, maybe the most comfortable spot. I still think that makes more sense based on what we've seen because it's only about halfway through the previous range. If you start coming down much lower, you're basically in the previous range, which is a little strange because it's like, well, they're sort of mixing blood anyways. You can kind of tell that this has been chopping along the top. I find that to be a bit obnoxious. I would prefer to see the ranges a little more separate, but there's nothing you can do about it. They just are kind of halfway into each other's space. It's where it built out, right? I think the bigger concern maybe that I have is the nature of that middle, and the middle is 5 roughly now, okay? And so if you're going to do a spring, I think if you went really low, you probably could do a spring that, like if you went below 425, which we were talking about, you probably could do a spring that does breach the top in an SOS motion. I'm not seeing a lot of evidence of that from the other wave, though. That's what I was trying to say. I did that early on in the day, spent a couple hours working on that. I just didn't really see it. We counted it out, and yeah, I mean, aside from like the date itself, which was about October 11th or so, I think that was where it may break, and then you might hit a top around the 22nd or something like that. There really wasn't a lot of evidence that it would necessarily breach. If you got the dip, maybe it gives it a little bit more gumption, but I guess that's a stronger possible move if it drops below there, below 435. I don't know. P&F doesn't really demand it anyways, regardless. It would probably add more to it, but I'd have to go look. There's some kind of rule about P&F bottoms that tells you where a spring is no longer a spring. And I've been under the assumption that it's here for a little while, that this is where the spring is best suited. Like this is like a phase B kind of bottom. Then you get a spring here. But I don't know. There's a lot that can happen between now and October 11th, so it's a pretty wide window. Pretty wide window. Anyways, about to say, part of the reason why I sort of think that maybe we don't get a low now is because if the desire is then to come back later, which is a big debate amongst peoples, if you were going to sell back down later, it seems impossible to a lot of folks. Like, never going to happen, right? That kind of thing. But if you were going to sell back down later, you could do it after a major move up here and come back down later and fill that gap. And then you could still trade across this region. So like one of the things that I had talked about for a little while, which I haven't talked about in a minute, but was like, all right, if you come really low, and I know a lot of people are going to be like, that's never going to happen, but I don't care. If you come really low and you fill that gap way later, then you can come back up and then drop below here, and it's a little wonky looking. It may look like it's really distributive. It just depends on how high this goes and junk. But if this ends up being like a phase B top and does not continue, then it's totally reasonable to me, because I'm like, you don't have to go low now if you're going to come back later and trade across this later. There's really no point. I think that's kind of my main sticking point. Now, if you did drop low now, it could be that the floor, maybe it's stronger, in some ways. I don't know. It's just a debate. There's really no right or wrong answer at this point. I'm just looking at this as like the target, and then I have to wonder if you know, there's similar things that happen back here with this breakdown and then the subsequent breakout. And there was probably a lot of potential to come back low, you know, early on in this range as well, once it hit the top. So again, it's just a debate of whether you think this is ultimately going to be a phase B top or something else. If you don't think it's going to be a phase B top, if this were going to just take off here and never come back low again, let's say, never do this again, I think that it would make a lot of sense that in this particular time frame, you might have some kind of like terminal action to come back and check that level, and then you just leave. It's kind of like what happened in SPY. You might come back and check this level again, like we were talking about with like a big backup. And it's again, it's this just sort of subtle difference between like an early break and a later break. So I think the argument's valid. If you think that it's just going to take off and go and never come low again, like maybe it never comes below 5 again or 4 again, sure. You know, maybe it needs to go ahead and do that and get low. It's kind of what maybe the place I would say that we differ. And this is probably why I was thinking like 460 was a stronger bottom and not 4. Because I'm imagining a phase B top that comes back down. Whereas a lot of folks, you know, again, there's logic to it. It's not illogical. It's just a difference of opinion. But a lot of people don't think that's going to happen. They think that it's going to go up, build up higher, and then continue. So there's a pretty huge difference in opinion in this kind of walkout here versus this. Yeah. Well, it's coming down to the wire, folks. I don't know what else to tell you. This is a weird day. I worked hard today, man. I'm tired. I need to work hard on my other stuff too, so I still got a lot to do today. And then Fridays are always fun, family time, but yeah, I'm gonna have to pump the brakes, I think. Man, I'm really like, expectations of the market really like mess with you. They really make you think that certain things have to happen in a certain way, and they're not always healthy. So you got to keep an open mind. The possibility that you're wrong about something is very real. I'm talking to myself. I'm just thinking, you know, if this is intended, if the intention here is just to take off and not come back, yeah, I think a terminal shakeout would be ideal. If the intention is to drive this price up high and then never come back below, you know, this value again, even if you dip back down, it's very different. This changes everything, because you look at this and then you say, well, your operators now has the opportunity to go get that liquidity. And if you think that this is possible, then you'd have to say that this is possible. I mean, it could be really bad. You know, it could really drop low in a terminal shakeout. That's not a easy to answer question. And that's just a matter of writing your expectations, because for a lot of folks, a terminal shakeout would just look like really bad, but in some ways it could be it's longer term, it could actually be better, you know. There's less likelihood of coming back later if you go ahead and get the terminal shake right now. I'd say that. That's true. I think if you get a terminal shakeout, and I think someone said 380, but it probably end up being like here, around 350s. If you ended up doing a terminal shake, which is just a massive dump, and then a recovery, I would imagine it could come down to like 350, like that previous top and bottom. And it's a little wonky, but certainly possible. 4 is just the tip of the iceberg for that kind of move. Yeah. We're just going to end up having to wait. I think big picture here, this all stuff we could kind of work on later. Whether or not this kind of stuff happens, we could work on later. I think big picture analysis is pretty straightforward. Here it's simple. You have a possibility that you're in a spring bottom right now. It could build out as early as October 4th through the 8th. I have a high probability that you're going to hit by about October 22nd or so. You're probably going to be back at the top here. It's just a waveform, simple. If it works, it works. I can go double check those kinds of things. Maybe next week we'll look at that. But I think we did a pretty good job. We did the PNF. It's very high, point and figure. It's up between basically 15 and 17. So that's a previously very important level for 2020. It also just so happens to be the November levels in 2020 when we had elections. So it's a full cycle. There's a lot of weird things about those levels that we've noticed today, including the reverse split area. It's just very strange. The early takeoff, or the takeoff in the January move is at those levels. I mean, it's just a lot. There's a lot there. So the desire maybe to bring it back to that for some kind of a cyclical reset. And then we've already got enough ammunition to get there. So if that's the desire, I know that it could have a terminal shakeout, but you don't really need more, you know. If you're only trying to get back to that November level, by November, you can do it right now. Frankly, to be honest, killing time may actually be a better option for them to just kind of let it sit. If they don't really want to continue any farther than that, they wouldn't want to drive it low. So it's a little weird, but we've had a lot of really interesting TA days. Today was probably one of those. I think we did a lot today. But yeah, these targets are fine. I mean, you can get there already. You don't need to have a drop. It would add more on the chart in terms of columns, maybe add an extra column or so, but that's not going to drastically change the price target at this point. So yeah, I may have said at different points like that was more likely, but this is probably not one of those points. If it happens, it's probably like a relative decibel set. It would be because of a shakeout opportunity. Yeah. So October 11th was the wave count back to the top of the range, or excuse me, October 22nd, with the bottom being around the 4th to the 11th, somewhere in there. Similarly, GME's top wave would be October 22nd. It's the same. It ended up being about the same. Possibility of a flush here is there. I mean, it's not impossible. And we went through this earlier. I'm not going to go through it all again. I'm just kind of quickly recapping. A lot of it depends on whether it breaches 2310, and then you can get an early move and then a secondary move. And AMC is kind of the same way. It'd be like a buy-in move and then a secondary move. AMC doesn't have to travel quite as far. So it would probably look like a much bigger move on GME, but really they're both going back to the same spot, which is that distribution level right after the 7th. They're very, very similar in that regard, here to here. So I think it's very likely that that's what's going to happen. We'll see. So I haven't really talked about MPW at all. Looks like a high amount of consolidation. Still of the mindset that, yeah, this could break down. Really haven't seen anything just yet. Tells me it's going to, for sure, or not. Not really comfortable making any strong recommendations on it at this time because I didn't really take a lot of time to look at it today. I know that the wave down would probably be to about the 540s area, 550s area. That makes sense to me because it's a retest of the macro breakout, but it's possible it holds higher, and it's also possible if it breaks higher here at 615 that it just leaves that for a lot later. And breakout levels 677 and 797 if it goes up. IWM pretty much as expected today, just bonked its head on the top. It's essentially just a hook on a potential head and shoulder motion. So if it shoulders down and breaks below at some point like about 2018, it's probably going to drop all the way to 2013. If it manages to hold support here, I'd be a little surprised, but it's also one of those positions where it could just take a minute. I mean, there's plenty of space. There's no rush. It could be quite a few days, 2 or 3 days before anything really happens. Any kind of a major breach or break back above 224 would need to hold support. Otherwise, it could be like a big distributive top. It'd have to hold support up there in order to continue and have continuation. So I have mostly abandoned WTO. I don't really like the play right now because of the way it's trading. It to me looks like a bit of a double top on a slide, on a slide, like a mudslide down, and I don't like that. It's got some weird backwards kind of messages it's sending on certain indications. Like there's a lot of strength on some of the higher time frames and some apparent weakness on lower time frames. Like lower time frames look really ugly to me. They look like cat ear, like pretty straightforward, like a big S curve getting ready. Higher time frames don't really look like that. They look like they're just kind of starting to break out. So it's really strange. There is some divergences across the board on a lower time frames, but then those divergences, so it's like super mixed up. And I think that's probably by design, you know. And what I've said is, as simply as I can, is that if I think if it doesn't come back above this kind of like $53 area, needs to build support again here, can't drop this particular line, which frankly goes pretty low, down to like 47 if it takes time. And there's a gap down there at 47. It really doesn't, you don't want it to see it break there. You want to see it hold and then break out. And so you'd be waiting anyways for that break above 54. So there's really not really much point in, if you haven't traded it, I wouldn't trade it unless it breaks above 54 cent with some strength and holds that level. And if you are trading it, I think it could turn very quickly into a very, very, very bearish play here. It formed a head and shoulder off 50 cent, broke it, didn't complete the head and shoulder, instead it hooked. And it's invariably kind of doing the dance where it's dancing between a breakout and a breakdown. So you've got this kind of double wave cross. One wave cross goes down and the other's going out, and it's doing both. So it's a frustrating chart right now for me because I find it to be kind of disagreeable in that there's clear evidence that it could come down lower. There's decent enough evidence that says, well, you know, it's kind of turned up. And if it does break, it's going to run like a freaking racehorse. But it's a very hard one to read. So high risk, high volatility here may not be your trade. That's all there is to it. And then I don't think AMC, anybody's surprised, is probably going to camp at 450 today. I'm a little perturbed that it came higher than 460. That it came higher than 462. It really irritates me because to me that didn't need to happen, and I think it would have been an easier, more relaxed range had we not done that up thrust. It just feels like an up thrust, a back test, and we'll see how it responds on Monday. Originally, I was kind of looking at this like it's going to go across here and form out a nice topping action. It's not so high like that it's busted. I think 470 would be really busted if it came above that and then dropped the creek. It didn't do that, but my expectation today have been largely met, which was to come up and then come back down to like 450 and then chill out till Monday and maybe do another advancement here Monday first thing and then probably head back down towards the bottom again. And I think that the creeks largely support this idea that it's probably going to round off and trade this. If it doesn't, there's two other options, which is you guys are like, well, sideways, up or down? Yeah, I know. Up is a very tricky one because it would have to advance and then hold and advance again over like a creek that I don't have on my chart right now, but it's basically like right here. And it's a steep ask. Like we haven't had that happen yet, so it'd have to be a real solid advancement. And then the only other thing I can think is it's distributive, which is unfortunate, but I don't really see if it's distributive like why any of this would look good. You probably get a sign of weakness here where you'd make a lower low than this particular floor at 441, and then you'd probably push up and do the same thing we've been doing, which is these cat ear distributions, and then set up for a big drop. That's different than it looks almost the same. I know it's kind of hard to understand because you're like, well, it looks the same as the other thing. It really just depends on how high it goes and whether or not it breaks below certain creeks on the process of coming back down. Because remember, it jumped over a couple today. I don't have them on the chart. I saved that chart. We'll look at it again next week. Don't worry about it for today because nothing's probably big going to happen today, I wouldn't imagine. And yeah, I'm probably missing some other stuff here. We didn't check any of the EMAs. We can do that really fast. And then I got to peace out because I got a lot to do. Yeah, so these 4 hour, 180, and 90 turned down quite a bit. Makes sense. They're going to position them more in line with where the creek is gone, which is lower. So everything's going to kind of come down lower. As this thing trades, these EMAs are always going to kind of line up with creek crosses by the end. So it would make perfect sense to see this kind of leap over, right? And then come back down and test them and then continue. And that's exactly what we looked for in the creeks anyways. Okay. On the daily, adding to that the 200 SMA because of the nature of it. And I guess I don't have it on this chart. I need to change the color of it though. I had it orange, so I want to make it orange again. So I don't want to get lost. We made a note that this particular creek down, this whip around on this, has been very consistently the same. And I made a note that if it does do this again, it's probably going to hook on it. Like, because it's been doing this kind of drag right around the 200 SMA. So much in the same way, it's closing beneath it. It looks like a wick above, and then it potentially closes beneath it right here on the daily. So take that for what it is, y'all. It looks like a bit of a head fake, kind of push up and then close back beneath that support, that resistance. It's not great. It's not the end all be all. It just kind of means that you might be camping for a little bit, and we'll see. This typically doesn't happen, that wick, unless it's going to try again or reject shortly after. So you might get one more push again Monday that tries above it, and then the rest of the week kind of rejects away from it. So yep. Bummer. Almost there. Really is. Yeah, I think if it doesn't happen first thing next week, I think we're going to go down another week. And I'm excited to see what happens after that. I think we're in a really good spot to potentially finally catch this and just go. So, all right, guys, I got to go. Have a good weekend. Catch up with you on Monday.